Hello, my Teaserking family. How is everybody today? I think I'm okay with the mic. Okay. I feel much better. My side was giving me pain. So I went to the clinic last night and they checked me for certain things. And I thought it was just a pulled muscle. That's what they kind of agreed. And I feel much better today. I did go swimming, but I was very ginger walking in the pool, took a nice hot tub, and I've been bending over on my right side, not my left, because it's my left sort of rib cage side area. So I feel much better. I didn't eat my roast today, and I had an omelet instead, and so far I'm okay. So right now I am very little pain on my side, and I'm a little woozy in my head, a little bit. I think it's a neck issue because if I look down to tie my shoes or put my shoes on and look up, I start getting off balance. And then if I look around, although it seems better now, I had lunch, the omelet, and in the pool, I went underwater a lot to try to clear my head, which did help a little bit. So uh, I don't know what that is, but I think hopefully it's gone or it's getting out. And that's it. So, it's as you get older, you get these new things that bother you that you don't even you don't even realize. You've never had them before, so it's crazy. All right. My class picture, and that's it. Okay, so some was listening to a few guys on gold and silver, which I will get into. Let's look at baseball first because that's more time sensual. Yesterday, Cleveland over 8.5. They played a 1-0 game with the Tigers. Who knew? Tigers pitchers, they're both were like 5 ERAs. Cincinnati, I hit. They won 6-0. Minnesota over 9.5 wins 8-6 in 11 innings, and uh, Atlanta beat Arizona 5-4. I thought that was a Chris Sale game. Well, Chris Sale didn't pitch. Some elder did. So we got a little screwed by Chris Sale not pitching. They didn't tell me that, I think. Or did he pitch Sunday? But Chris Sale had to be pitching. I took him for 5 units. B. Elder with this 5.71 ERA. So we got fucked by the change of pitcher, but we still won it. Diaz. See, these pitchers weren't the same. Diaz pitched with a 1.50 ERA, and Sale was supposed to pitch. He didn't. This Elder pitched. So you got to watch the pitching because I would have taken Arizona, but Atlanta wins 5-4. So we make out, but it's crazy. So we end up going 2-1. Atlanta for 5 units, Minnesota over 9.5, 2 units, and Cleveland. Again, it's the Tigers. And again, you have no idea what you're getting out of the Tigers. They hit against the bad pitcher, they don't hit. Against the good pitcher, they hit. This is the problem with them. They're so inconsistent. You have no idea what they're fucking doing. All right, let's go to 7-9. So the first game, I believe, is KC St. Louis is postponed. We don't care about that. So let's go. Chicago Cubbies against Baltimore. James Talon for the Cubbies, 5-4, 2.99. Dean Kramer, 4-4 with a 3.93. Baltimore is the better team. Talon Looks like a good. So here, do I take the better team and ignore the pitcher, or do I take the pitcher? Both pitchers are good. I don't really know. I think I'll just go with Baltimore. They're at home. Let's go 2 units. But again, I got a 2.99 pitcher. I don't really want to bet against them with the 3.9 pitcher, but we'll see. Cleveland, Detroit. Um, so we've got Ben Lively for Cleveland, 8-4 with a 3.14 against Kenta Maeda, 2-5 with the 6.71. He sucks. Let's go Cleveland here. We'll go 3 units. This pitcher for Detroit sucks. Ben Lively, 8-4 with a 3.14. Detroit obviously can't hit, so I can't really worry about the over-under here. Cleveland should score a lot on this guy, so we'll see. Good series. The Dodgers and Philly starting today. Bobby Miller 1-1 with a 6.12. Zach Wheeler 9-4 with a 2.74. Let's go Philly. And we'll make this 3 units. And let's see if we get Bryce Harper back. The Yanks in Tampa. The Yanks, of course, they're favored, 125, 7.5 in Tampa. Carlos Rodon, 9-6 with the 4.45. Ryan Pepiot, like Grey Poupon, 4-5 with the 4.40. Why is this 7.5? What the fuck? The Yankees, 3.66 ERA, 2.48 batting average. And Tampa with the 4.43 ERA and a 2.35. We got to go over here. This is a joke. Yankees. Yeah, it's a New York Yankees. We'll go 3 units. Over 7.5. This bet's made because it's a low over under. Tampa's bullpen sucks. They should score a lot. Both starters are in the 4s. We know the Yankees can hit, and we know Tampa hits a little, but they're at home. Maybe they hit a little bit better at home. That's probably the next thing you can work on to bet baseball is let's start looking at home and away. How's Tampa at home? How's Tampa on the road? ERA and batting average. I know Colorado is much different. So we'll see. So then we start looking at it like that. Hey, Greg and John. We start looking at it like that because here we're looking at relievers ERA and batting average for the team, and we got the starters ERA here because they change every day. You don't want the whole ERA. So I think the Yankees over 7.5. I don't know. I don't understand. DJ Mateu hitting 190. I'm like, wow. Now I did find Philly's got 300. 3 guys hitting 300. I think Cleveland's lineup is pretty fucking stacked. They have 2 or 3 300 hitters and a bunch of 270, 280 hitters, and they don't have anybody hitting under 220. You go to the Tigers, there's 3 guys that aren't even in the 150s, and then 2 guys under 220. So they got 5 guys who can't hit. But you don't see that in Cleveland. You don't see the 290, the 190 hitters there. Amazing. Detroit hasn't figured it out. We're still looking for walks. Well, they can walk, and Oakland, Boston minus 210. The game's in Boston. Oakland's going to the East Coast. They're going to be tired. Joey Estes, 3-3 with the 4.39 against Brian Bello, 8-5 with a 5.19. Now I see why the over-under is 10. The problem is Oakland doesn't hit. Boston, I think, has a pretty good bullpen. So we have to leave it alone. This would be an over, but 10's a big number. It's in Boston. So, yeah, this probably goes. See, the problem is you're going to need Boston to get you the over. Then you might as well bet Boston. But you got a 5.19 pitcher on the mound, which makes it impossible. Weather is a hot one today. Yeah, Jenna was saying that in the Ukraine. It was very, very hot. She says it's really hot, hotter than normal. So I don't know if she's getting nukes or what's going on there. But she goes to the lake a lot. Colorado, Cincinnati. Cincinnati's a 198.5 in Cincy. They won 7-0 yesterday. Cal Quintrell 6-6 with a 3.77. Nick Leoto 8-3 with a 2.96. I like Nick. Let's go Cincinnati. We'll play this for 3 units. Washington against the Jets, Jets. The Jets are favored 135-8. Jake Irvin for Washington, 7-6 with a 2.80. Nice ERA. Jose Quintana, 3-5 with a 4.22 for the Mets. This is a Washington game. I mean, they're the dog. They got the 2.80. Let's look at the bullpen. Washington's is pretty bad. 409, they hit 239, and the Mets is 402, and they hit 247. Pretty weak bullpen. I don't know. I think either Jake Irvin just shuts them out. But again, how many innings? 5 innings? Then they get to the bull. I think we got to go over here for the NYMs. Over 8. I'm not going to bet it, but I think it's an over. Because, again, where you get misled is you think the guy, he's 7-6 with 2.80, but that's for what, 5 innings? So there's still 4 more innings or 3 more innings in the game if you go 6 innings. The Mets have been pretty hot hitting. Minnesota and Chicago White Sox. Minis minus 167.5. Bailey Ober, 8-4 with the 4.12 against Eric Fetty, 6-3 with the 3.13. The edge to the White Sox. We know they're a Z team, but it's not like they never win. They are 26-67. They have won 26 times. 4.52 ERA, 2.22 batting average. Jesus. And Minnesota with a 3.61 ERA and a 2.55. The Mini's much the better team. Eric Fedde, okay, so he goes 5-6 innings to shut out Paul. Well, he's 3.13. He's not 1.0. He's no Verlander. Over 8-4 at the 4.12. So I think this has to go over. Let's go Minnesota over again because it's 7.5. So we'll play this for 3 units. The bullpens just aren't strong enough. They're hitting Minnesota hits the ball. I mean, the White Sox have a low batting average. Doesn't mean they don't hit. I mean, every once in a while they score 10 runs. So it's not like it's not like the NFL, like Carolina. I mean, with Bryce Young and that offense, yeah, they're pretty much going to get 10 points a game. That's it. Or some of the Steelers last year, or the Bears. A lot of these teams are under teams. You're not expecting any points from, or Iowa, the Iowa Hawkeyes. What are you? The over/under is 32, and they'll score 10 points for you, and that's all you're expecting. And baseball's a little different, even though they got a 200 batting average. They still can get, because it's an average, 10 points a game. Football is an average, but I think you see they score 30 points a game. You expect a third unless they play the tough defense. So like the Lions, when they played Dallas, you weren't expecting 30. You got 30 against the Niners, which was shocking. Raiders should be an under team. Well, we'll have to see. I think Brock Bowers is going to play slot receiver. He's too good. And you got that other tight end from Notre Dame. So I think Bowers is going to be a much bigger part of the offense. Minshew's not bad. The defense is going to be outstanding because the defense now wakes up. We got Brock Bowers. We got a chance. See, if you give the defense a chance, they'll play much better. When the defense, like the Carolina defense, probably plays like shit, like the Washington, because they know they can't win, so they say, what the fuck? But if they think they can win, they got Joe Montana or Brady, he's going to win it at the end. Okay, guys, we need the stop. They get the stop for you. But if there's no point, then they don't care. So, yeah, a lot of these, we'll see about these other teams. But that's why we wait 3 weeks. All right. Pitt and Milwaukee. Milwaukee won 68.5 games in Milwaukee. Josh Fleming 1-1 with a 4-1-3 against Colin Ray's 8-2 with a 3. I like Milwaukee. I like this Colin Ray. We'll go 3 units on Milwaukee. Pitt, Josh Fleming 4.13 ERA. Colin Ray's pretty good. All right, we'll go Milwaukee. Miami and Houston. See, look at Milwaukee was at the Dodgers. I think they got swept, or maybe they won the last game. They didn't hit, and it just shows you now in Milwaukee they'll hit. But, in some of the series they hit a lot, and then you get certain pitchers and they don't hit. That's why the pitcher will beat you. All right, Miami and Houston. Houston's a big favorite. Trevor Rogers 1-9 with the 4.91. Roland no hitter Bianco 8-3 with the 2. There we go. Houston 5 units. Houston's the highest played game on the board right now. It's at Houston, and they're hitting, and Bianco very strong. Miami can't hit anyway, so yeah, look for Houston here, big. Who's going to win it? All the Chiefs. Why do you ask those questions? Texas and California. Max Scherzer on the mound. 1-2 with a 2.70 against Ronzi Contreras. We're going Big Max here, and this is going to be our next 5 unit. He's had bad luck where he's faced the ace in his last 2 games and lost like 2-1. But his ERA is 2. He's not giving up runs. So here, Ronis Castona 1-1 with a 4.05. Scherzer's this will be a shutout. Can we bet it's going to be a shutout? Seattle at San Diego. Logan Gilbert for Seattle, 5-5 with a 2.91. Adam Mazur, 1-2 with a 7.52 for San Diego. San Diego can hit. Logan Gilbert's 5-5 with the 2.91, so he's good for an under. But the way San Diego hits, and it's in San Diego, I'm not touching this one. Atlanta, Arizona, we had now who's pitching? Now Chris Sale's going. Motherfuckers, they said yesterday, and they didn't pitch. Now he's pitching today, hopefully. This is what I hate. What can I do? I got Chris Sale pitching, so what am I supposed to do? So with Chris Sale going against Zach Gallen, 6-4 at the 3.06, this is an under. We got to go under. Atlanta under 7.5, and we'll go 3 units because they both hit fairly well, and this type of game ends up being a higher scoring game. We'll see. Hopefully not. But now I got Chris Sale. I thought I had him yesterday. And last but not least, Toronto's at the 49ers. 49ers minus 127.5. UC Kikuku, 4-8 with the 4.12 against Blake Snell. Used to be at Tampa, 0-3 with a 9.51. This is a 7.5. We're going San Fran over 7.5. What are you kidding me? And this will be, we'll go this for 5 units. So we've got 2, 4, 5, 6, 7, 8, 9, 10, 11 plays. And honestly, I don't know what to do to eliminate it. Baltimore, 2 units, Cleveland, 3, Philly, 3, the Yankees over 7.5, 3, Cincinnati, 3, Minnie over 7.5, 3, Milwaukee, 3, Houston, 5, Texas, 5, Atlanta under 7.5, and Frisco over 7.5. It all depends on the pitching. Sometimes I take the over-unders, and sometimes I take the teams. Usually when I got a good ace going against the weak pitcher, I take the team, which is why I took so many teams today. Cleveland's got an ace going. Philadelphia's got their ace going. Well, Ranger Suarez, I don't know. He's tiring out, I think. They got the All-Star game coming up, so we will see. But that's baseball today. So yesterday I was very good. I made you 5 units, and today we'll see. We got a bunch of games. We talked NFL yesterday. Any questions or comments? Let me know. I think San Diego, to talk about Oakland, is going to be really worst move they made was not taking Brock Bauer and taking an offensive lineman. I think that's a very stupid decision. I'll remit back to the Green Bay Packers in 1989. They took Tony Man. They had the second pick. Troy Aikman went 1 to Dallas. Barry Sanders is sitting on the board. But Green Bay takes Tony Mandarich 2 because they have Brett Favre, and they take an offensive lineman. And who did the Lions take with the third pick? Oh, yeah, Barry Sanders. And Green Bay would have won 5 Super Bowls if they would have taken Barry, because that's my point with offensive lineman. Mandarich didn't even play. He was on steroids. He sucked. And Barry, we know. And so this is my point. I can replace the offensive lineman far easier because they don't do anything anyway. Do I always, if I put him at left tackle, he's just there to pass protect. What if he can't handle the guy? What if they blitz him? He can't block 2 guys. And then you have the rest of the line, I'll blitz from the other side and nobody's there. It's a very difficult thing to take an offensive lineman ahead of a Brock Bowers. It's incredibly stupid. It never works. And, it's sort of like Tom Brady. You took 6 pathetic quarterbacks ahead of him, or Dan Marino. You took 5 or 6 stupid quarterbacks ahead of him. Joe Montana, you took he was a 3rd rounder. So when you got the name, you grab them because there's only one Brock Bowers every 10, 15 years. You have them. The offensive lineman you took, is he even going to start on your team? Is he even going to play? Does he even know how to play NFL football? Brock Bowers, he can catch, and how good he is, and he can run. That he can do in college, he can do in the pros. And offensive lineman, like I said, if I'm drafting, all right, let me see, 4th round, who from Ohio State, Notre Dame, Michigan still available, who started? Oh, yeah, I got 4 guys who can fill the bill. And I'm fine. Not all lines are 1st-round picks, nor should they be. You shouldn't waste your talent on that. So that's where I'm at with that. San Diego made a huge mistake, and it's going to pay. They'll be an under team because they won't have an offense. Where Oakland should find a way to use them. They still need a quarterback. It'd be nice if they got Cam Rising next year, or the guy from Oregon, Gabriel. So it'd be nice if they got him. I wonder if they're related, Roman Gabriel and the Gabriel on Oregon now. Maybe cousins. I think the Chargers are going to be awesome. I don't. They're going to play Michigan football. They're going to have a good defense. Harbaugh's there. He'll make the defense good, but I don't like his offense. Herbert's really good, but he got rid of all the receivers. Why did he get rid of Keenan Allen? That was a huge mistake. And then you didn't replace him. And then you got rid of the running backs. Now Kelly will be good from UCLA. He's good, but not ideal. And then you have they just want to run the ball. I mean, it doesn't work. It doesn't work in the NFL. They're not playing Indiana and Illinois here. So anyway, so that's it. We went through the NFL week 1 yesterday. Basically, like I said, so on my website will be the class, $25. When you pay me, I'll get your email because I see it. And then that will be a private class when we're going through picks. I'll still do something like this, maybe, where we'll just talk in general, but I won't give away picks here. We'll go to the class, or you'll just get them off the site. If you just buy the week or the year or the month, you'll get the picks that way. All right. Let's go to gold. Gold was doing okay. Why does it do that? I hate when it goes through and it doesn't populate. Must be going up. They're scared to show it. The gold futures are 23.64 up 110. These are, I don't know what futures they are. If it's what July, is it September maybe futures? 23.70. Oh, it's up 720. So gold was in like the 23.60 range, I believe. Well, I'll have to check back. That's baseball. Gold's pretty even. Um, let's So there's a few videos I want to discuss with you. So we've looked at how the Nazis tried to destroy the British by printing money. So we talked about that the last few classes. That's the real inflation. The money printing ruins the currency. It devalues it because it's worthless. Prices go up, but not, it's really, you've killed the value of the dollar. So you need more dollars to buy a can of tuna. I mean, basically, so if I'm selling the tuna for $2 with real money and then you inflate it and now it's not worth anything, well, I'm going to need $5 of that bullshit money to buy to sell the tuna to you, because the tuna is now the dollar is worthless, so I'm going to have to charge you more. So that's what happens there. Um, the French elections trigger another European crisis with the euro. Yeah, I don't see that. Okay. Then we had Alligator, but a lot was from his show with Mark McGuire. So what's happening now is he does the Mark McGuire show, and then this guy here, uh, Silver Ocean, basically replays 11 minutes of it to take credit for it. So he sits in there and says, "Oh, this is what's happening," but it's the same show we saw with Mark McGuire. And then BRICS launches an interbank payment system with Iran. So BRICS has launched it. We can look at a little Mark McGuire, but there was one thing I wanted to. All right, so this guy. But Washington, D.C. and the Federal Reserve are. This guy's one of the stupidest guys. Please don't waste your time with him. It's Matt Poffenberg. I don't know what he's like, a stockbroker. He's like Egon. He works with Egon, but Egon's Austrian. This guy, I don't even know if he's Keynesian. He's an idiot, basically, is what he is. I read this: why gold is intentionally misunderstood. This guy's got no fucking idea. He's one of these guys that talks but doesn't say anything. All like Peter Schiff and Rickards and Rule and these guys, but he doesn't know anything. I mean, it's amazing. He doesn't know anything. So we can kind of, I notice he turns the comments off, so I can't burn them. But let's listen to this perception of gold. There's a few gold things, so let me clean this guy up.
High to the hip to the two failed banks. It's the mother bank, the Fed, and the little baby banks are the too big to fail. It's getting weaker by the minute.
I think that's probably one of the best ways to put it, is that gold should be your savings account, not thought of as the checking account. Yeah. And there's another piece to that I'd like to get to. But first, you mentioned this deliberate misunderstanding of gold. What do you mean by that? Who gains from it, and why is there, let's say, an effort to cause that misunderstanding?
All right, let's hear him blow this.
So let's because it's really important. Again, just take the last 24 years. Gold has outperformed the S&P.
S&P.
It's certainly held its value more than the U.S. dollar. And it is infinitely a better reserve asset than the U.S. Treasury. And yet no one on Wall Street talks about it. No one in the family offices allocates. Remember, 1% allocation by family offices, the smartest guys in the room, 1% allocation to gold. Why? Because it's a barbarous relic when it's outperformed all other asset classes.
Okay, first of all, we've gone over this because they can't get commission on it. It's their job, Wall Street, to make profit by selling things with commission, stocks, real estate trusts. That's what they do. Okay, that's what Wall Street is in business for. They can't make commissions on gold because gold's money and there's nothing to make from them. Why would I pay them commission? Because I'm going to buy the gold and keep it. They probably do make commissions on the gold ETF, or they should on the gold stocks. But on physical gold, there's nothing to make. You buy it, it's like buying my Canadian Club or my Mahomes cards. It's like, it's like selling cards. Well, they're not going to make commission on selling a card, although eBay makes commissions. So if I go to a trade show, the guy marks it up a little bit, but once he sells it, it's yours. Once you sell gold, it's not yours anymore. So there's no money to be made on Wall Street because there's no commission. They're interested in selling commission stuff, not that. Now let's hear this idiot's answer.
At least risk assets. So you got to ask, well, that can't just be a coincidence. 25 years of outperformance and still no one touches it. Couple of things. And again, Austrian economists and Eastern investors that I talk to see through this, but the West doesn't. And I think, because they're not educated to think that way. But I also will argue it's a deliberately misunderstood asset. Because if you're a banker at JP Morgan or Morgan Stanley or Wells Fargo or Goldman Sachs and you work in the private wealth management office, or frankly, even if you work as the CFO or the COO of a major bank, you can't make money in gold. That's the first thing. Gold storage isn't leverageable. It isn't hypothecatable. It isn't the same kind of money maker that it is if you want to leverage bonds and stocks and, fractional reserve banking. Gold is not profitable, so it's not discussed. It really isn't. It's not big money in charging fees for the big banks. The only banks that lever gold are the LBMA and COMEX banks, just to keep the price artificially short. But as a profit center, gold is a no-go for banks. They want far bigger 10x returns on leverage at your expense, at your risk. So A, it's not even good for their business. B, politically, gold is the most embarrassing thing to a country that's in debt. And that is why The moment that we got off the gold reserve, the gold-backed currency in the early 70s and 71, Kissinger and Burns and
Yeah, we got
Volcker,
that there.
what was their biggest concern when they came into the FOMC or when they came into the Eccles building every day? What's the gold price? What's the gold price? Because if the gold price goes too high, that means the U.S. dollar is embarrassed. It means the U.S. dollar is in trust.
There's no correlation. He goes off on this tangent, but he doesn't even know what he's talking about. So first of all, banks don't sell gold because they are in charge of printing the money. So JP Morgan prints the money, so their focus is on the money. Wall Street's focus is on stocks, bonds, real estate trusts, and the bank's focus is on getting your money to loan it out. There was nothing there for the banks on gold. It's just like the banks selling baseball cards. So he can make the same argument if he's smart enough on Mickey Mantle cards. I show you the Joe Montana rookie. So what's the difference? But banks aren't going to sell you a Joe Montana rookie because it's not their place. So it's rookie, it's Montana cards, it's Jim Brown, it's Mickey Mantle, it's Bobby Orr. But the banks don't touch that either because they're into the paper. And gold is the same as a Mantle card. It's an asset. It's an investment. It's real money, but it's not a bank asset. It's not what the banks do because they'd have to buy it. And then it's like when I go to the jewelry store, the coin store to buy it. He holds it and he makes a little bit of money on it. So there's no profit to be made on gold. It's all based on spot. Now, to keep the price down has no bearing on the dollar, just as if the Joe Montana card's 125,000. The dollar has no bearing on it. So why is gold treated different than a Montana card? So why can't gold go up? Why would the dollar be embarrassed? It's not correlated to it. Nobody looks at, gold's high, so the dollar's weak. Nobody gets that understanding. What it is the dollar, if gold goes up, maybe I want to buy it, but you can still buy it low. Now, he made a comment about it's a savings account, not a checking. Silver's the checking account. Silver, you're going to go to the grocery store with. Gold, you want to hold. Gold's a big asset thing, to talk about what he was talking about before. But this guy there is no correlation. Why do they make a correlation? There's no correlation. Most of the people don't understand gold anyway. That's why, as he's saying, 1% in the portfolio. But what portfolio are you looking at? The portfolio on Wall Street? The JP Morgan Goldman Sachs portfolio? Well, of course, there's no gold in it. Why would there be? It's not what they sell. The jeweler store and the coin stores are selling the gold. The eBay and the sports car show is selling the Montanas and the Bradys and the Michael Jordans. So you're barking up the wrong tree trying to explain why a bank doesn't sell gold. The same reason they don't sell a Mickey Mantle card, because they're trying to Madoff you. They're trying to scam you. So this is their thing. All the Wall Street and the banks. It's the dollar. That's all it is. It's the dollar. It's got nothing to do with gold. It's not related to gold. If gold goes up, why does this go down? This is a totally unique and separate thing. If gold goes up, doesn't mean the dollar's gone down. Why people think there's correlation, it blows my mind when there is no correlation. If the dollar goes weaker, you're buying gold because you're the same reason you're buying Joe Montana and Mickey Mantle. It's an asset that you think will go up. And if you would allow it to go up, if you would allow it to be free market, like the Montana and the Mantle card, it would probably be $50,000. It would be very expensive. However, that doesn't mean the dollar's worthless. Where's that coming from? Because it's fantasy. So this is what I say about this guy. He talks, but he doesn't know what he's talking about. Okay, let's see if he draws a conclusion.
There's no incentive to talk about gold in the West. Politically, it's an extremely embarrassing, toxic topic for a country that's in debt.
Why?
Now, I'm sorry, it's not a conspiracy theory, but Washington, D.C. and the Federal Reserve are tied at the hip to the two failed banks. It's the mother bank, the Fed, and the little baby banks are the too big to fail banks. They live off each other. They make policies together. They even think portfolios together. It's my strong opinion that gold is not good for business for the U.S. government. It's not good probably for the banks, so it's not discussed. They don't want massive demand for gold. Now, that may be a conspiracy theory, but it doesn't change the fact that if I'm a wealthy person, I don't care what my banker Goldman Sachs tells me. I want to figure out gold on my own. They have no incentive to teach you this, which explains why, despite its massive outperformance of the S&P, its massive outperformance of U.S. Treasuries, no one holds it because it's criticized as a gold bug conspiracy theory about the end of the world. I was talking to someone in Scotland a couple of weeks ago, a very wealthy guy, and we went to his private wealth manager in Dallas. He said, "Gold." The guy laughed at him. Gold. It's so condescending. It's so ignorant. And look, I didn't grow up in my mother's basement doing Google searches to understand gold. I was a hedge fund manager. I worked in banks. I ran a family office. I understand gold. I don't laugh at it. Doesn't mean it's the only thing you should own. Doesn't mean speculation doesn't have its place. But the fact that these RIA industrial complex banking private wealth managers laugh at gold is an insult to the person they're across the.
Okay, so again, they're not selling sports cards and gold and silver and Canadian Club bottles. That's not what they're trying to do. They're selling this. So therefore, if you went in with Mickey Mantle cards, they would laugh at you. The same. If you went in with Rolexes, they would laugh at you. Because their business is selling this, which is stocks and bank products, real estate trust, all that. See, this is a different segment. There's gold, there's Mantle cards, there's Rolexes over here. So you got gold, you got Rolex, you got baseball cards. Those are all different worlds. And then here comes the money. So it's living so why would they talk gold? Why would they talk gold if I'm at a baseball card show? I'm looking for Mantle cards. That's what they're there for. So if you go to a bank, they're talking bank. You're not talking, why would they talk gold? They don't, it's not part of their plan. It's not what they're selling. So why would they care about it? So it's like talking to a Russian guy in German. He doesn't know German. It's not his, I'm a Russian guy. I talk Russian. And so that's the thing. So he's going down he doesn't understand. He's going down the wrong. Why would you go to a portfolio manager and talk gold? Why, he's not selling it because the Ponzi scheme is to sell the toilet paper. This is worthless. So they're trying to sell it because that's where they make their commissions. Somehow it's rigged where if they sell you 100 shares of Apple stock, they get a commission. But if they sell you a Mantle card, there's no commission. If they sell you gold, it's all the same, right? Whatever they bought it for, they mark it up a little and sell it. Well, there's not here I can sell you 100 shares of Apple, and then when you're ready to sell it, I get commission on the sell, I get commission there, I get commission on the real estate trust. That's the game, but it's not. It's like football. Let's do it the easy way. It's like football, baseball, and basketball, right? Gold and the collectibles, the Rolex are football, and then Wall Street and the banks are baseball. So what you're in the wrong place. You're trying to. Why don't Wall Street talk it? It's outperformed it. You want to know what a Mantle card's done versus gold versus all that? I'm seeing $60,000 for a PSA 9 1965. What do you think the return on investment of a 5-cent card is there? Right? And that's the PSA 9 out of 10. How about the Montana rookie card? I probably spent $50 for it. It's worth $125,000. What's my return on investment there? Probably a lot better than gold, but he doesn't bring that up. He doesn't know. He doesn't understand what he's talking about. This is the problem I have with the guy. He can't think outside of the box. He can't understand economics. So what does he say? Well, geez, they don't recognize gold. But you're barking up the wrong tree. They're not gonna recognize gold. It's not what they're selling. We're playing baseball here, not football, not golf, not basketball. We're playing baseball. So why would I start talking about the 49ers in a baseball thing? I'm not, right? So that's the problem. He's in the wrong spot. He doesn't understand it. One thing has nothing to do with see, that's my argument, right? Baseball and football have nothing to do with each other. So therefore, the Mantle card or the gold or the Rolex have nothing to do with the dollars. Why would it? Oh, well, gold went up. Well, that means the dollar's worth it. Why? Why is gold in any way attached to the dollar? It's not. Now, when you have heavy inflation, as I say, and I want to get out of the dollar, right? I know this is going to zero, so I want to get out of it. But there's nothing else in their game to play, right? So I can't go to a mutual fund or a stock or in the banks. I can't go to a CD or money market or annuity or real estate trust. I can't go. All that shit is not. It's a very heavily printed. It's like keep getting these. So everything they do is this. This is a million print card of Reggie Jackson. If it's a stock, if it's a mutual fund, if it's a real estate trust, if it's a money market, if it's an annuity, they're all highly, highly printed. So when I say to get out of this, what do I tell you? Buy baseball cards, buy Rolexes, buy gold. They're all very limited. You can't really print the Mahomes card, right? There's 50. I can't print any more of those. I can't print gold, and I certainly can't print a Rolex. You can have fake ones, but as long as it's real and the guy knows what he's looking at, you can't really fake a Rolex. So it's out of the dollar world and into these other worlds. But he doesn't get that, right? So that's really the problem. It's it's the same thing with baseball cards. The original ones aren't worth anything because they printed a million of them. And it was my idea at a trade show to come out with limited cards. I was talking to a guy from Beckett, the sports magazine, and I said, well, none of these cards are worth anything. They're all overprinted. He says, what would you do? And I said, number them. I'd say, you make them limited, make them numbered out of 20 or 50 or 100. Then it'll bring in value. Next thing, within the year, they started coming out with numbered cards. And that's where the money's at. Now people will buy it because they know it's limited. People aren't stupid. They will buy limited things. But there's nowhere this dollar. But does he understand that? No. It's over his head because he's not a critical thinker. He's not an economist. So he doesn't know there's no coordination between the dollar and gold. Oh, if gold goes up, the dollar. People don't even understand gold, so they're going to dump their dollars because gold goes up. No, but they don't see it, just like they don't see baseball cards. Did you see them I'll talk to somebody, about baseball cards or something, and you'll know that Honus Wagner 1906 is like $5 million, and we know the Jordan's like 500,000. But did you know the Montana rookie's 125,000? No. So if it's a PSA 10 or 9, these mantles are 9. Wait a minute, they're worth a lot of money. Does that mean the dollar's weak? No. That's what you go into is the limited stuff. And the reason the mantle 9, there's not a lot of 9s from 1965 or 1968. That's the problem. And the newer cards you don't need because they're numbered. So there's many options. This is what I talk about with gambling. There's many options to go to, but really the stocks and the banking are not limited. The dollar is not limited because it was limited when it was gold back. And as soon as you took the gold back off and now it's just free printed, it's a nightmare. And it's a bunch of highly printed. The dollar's like the Reggie Jackson million count card. It's not worth anything. There's too much printed. So you have to go from highly printed to limited. And then what these other guys don't understand is paper gold and paper silver, which is where I use my cards and my gold. to talk about, well, it's limited. The paper is not limited. That's why we don't care about the paper price. The physical price will be limited because there's only so much gold. So that's what we're waiting for. And we got bricks handing it to us saying, we're going on the gold standard, the physical gold, and it's limited. And now we're back. Now we're into the sports cards, the PSA 9 mantles. And that's when I show you it's 60,000. Where do you think gold's going once it's free from that? But who in the world is thinking a high gold price means a weak dollar? It's got nothing to do with it. They're not correlated. How are they correlated? They're not. I mean, it makes no sense. Oh, the dollar went up, so gold goes down. They're not correlated at all. I still find it. Where's the correlation? At what point? Who's correlating this? Nobody's correlating it. Fuck, they can't even price the physical. They don't know what the fuck they're doing. All right.
The table from. That's not being a fiduciary. That's being a salesman for your industry. And again, I don't think they're evil. They just don't understand it. And they don't want to understand it. And I really do believe that. It boggles my mind why people don't own more gold. What also boggles my mind is the number of bankers who are clients who own a lot of gold privately, but not in their bank accounts or not where they work, or the number of hedge fund managers I know who own a lot of gold, but don't trade it on their accounts.
See, he doesn't understand. It's a different world. It's a different sport. At the bank, they're playing baseball. If the guy has a lot of gold at home, he's playing football, right? He knows gold's good, but they don't sell it at the bank and they don't sell it at Wall Street. It's not one of their items they sell. So of course they're not going to sell it because he's in the wrong area. He wants to play golf on the tennis court. Fella, they understand it. They can't sell it because it's not in their portfolio. There's no commission on it. It's like selling a Mahomes card, or it's like selling the Mantle. If I had the Mantle card, well, I can't. How many can I get to sell it? That's what eBay's job is. So this is what he doesn't understand.
So there's what they say and what they do. Obviously, I'm not going to disclose who they are. It would be shocking who they are. But the smart money, even though they peddle risk assets in credit pools, private credit pools, and private equity, when they make their money, including a lot of Bitcoin millionaires, they convert it to gold to store their value. Again, I'm not saying gold's the only thing. I'm not saying if you want to take some risk on high yield credits or junk bonds, or you want to speculate on NVIDIA, or you want to speculate in Bitcoin, which is just a triple Q, 3x lever. To me, and I have a lot of respect for the narrative of Bitcoin. I still think it's a speculation asset. People will be pissed off when I say that. That's what I think. But I have nothing against speculating. I made money in the dot-com bubble by speculating more than I deserved.
Nobody
but
cares.
I preserve outside of those markets. So I'm not saying that gold is the cure-all and be-all and the only thing people should understand, but the fact that so few understand it and the fact that there's so much time spent attacking it makes no sense to me when I look at the way it's behaved.
It makes perfect sense. Okay, so let's break down his comments. Nobody has it. You don't know who has it. You don't know we have it, right? My class, we all have gold and silver. You don't know that. The people, we don't want to own stocks and money in the bank. We want to get out of the whole Ponzi scheme. We want to get off the Titanic. So we move into Rolex and Mantle cards and gold. Not Bitcoin. Bitcoin's not real and not anything to do with paper. So you're getting off the Titanic is getting out of paper because it's heavily produced. It's not limited. So we get it. But the salesman selling the stocks, why would he start selling gold? It's not in his portfolio list. So it makes perfect sense why he's not talking about it. And when you ask them about it and they're poo-pooing because they're trying to sell, you can't go to the banker and ask about gold. Of course he's going to poo-poo it. Just like if you said, what do you think of Mantle cards? He'll give you a little different answer. He'll go, yeah, I like those, but since we don't sell them, I'm not going to offer them to you. It's all the same. They're all assets. But stocks and bonds and money really aren't assets. It's an asset that's worthless, as are most of the stocks, and the bonds are worthless. They'll never get paid back. And the real estate trust is worthless. So most of this shit is worthless junk that they're selling. But They Ponzi scheme you. They all Madoff you, just like Madoff didn't sell anything. That's what the banks are. And Madoff was a banker or a Wall Street guy. So it's all a Ponzi scheme. So of course they're going to laugh at gold because they want you in the Ponzi scheme. Just like Madoff. Don't ask me how I do it. If you want to ask, then don't come with. Oh no, I want the 15% return. They didn't even know what Madoff was doing. And that's the whole thing with the Wall Street banks and the banks. You don't know what they're doing. Now, as far as educated with gold, who's teaching it? They're being paid to not teach it. That's why I'm here. I accidentally learned about it in my master's because I took an Austrian economics class that I had no idea what it was at the time, and now that's all I talk about. But that's where I learned about gold. It's not printable. It's limited. It's money. It's an asset. It's worth a fortune, but it's been held down by the paper and all the competition. See, you got all the Wall Street and the banks on one hand trying to get you to buy their shit, and it's all shit. Who's the gold guy? There's no gold guy out there saying buy gold except me. Nobody's out there saying to buy gold. And Andy Scheckman and these guys, that's what they sell as gold. So you can't take them serious. Peter Schiff, you can't take them serious. They're just salesmen, and they talk like salesmen and they act like salesmen. But they can't explain it the way I do. None of them can, because none of them have my skill set in explaining or the fact that I understand it from an economic standpoint, from a gambler standpoint, and from a economic standpoint. They can't touch me. That's why I boo most of them and say they're idiots, because they don't talk paper gold to physical gold. They don't get the limited, the PSA 10 Mantle, the limited. They don't understand the paper gold is not limited. The physical is. That's why I know it's worth 10 times more. And then we get into, but it's been price fixed for so long, what's going to change? And that's where I see bricks coming in. So it's like the AFC NFC merger. All of a sudden there's one leg. And that's the key. BRICS is going to a gold back system. And then also all you got to do is wait, because they're going to price gold much higher. And if we get to a physical price, it sounds like COMEX is breaking down, then we're fine. All right. Let's listen to more.
Not just in the last 24 years, but in the last 100 years, the last 300 years, the last 5,000 years. And so, again, it sounds like a rant of a gold bug. But again, I ran a private equity fund, a hedge fund during the dot-com bubble. I made money I didn't deserve on risk assets. I traded a lot of bonds. I have nothing against those. But the way I look at them is no different than Jeremy Grantham or Jeffrey Gundlach today. I get no confidence in those risk asset markets. I certainly don't want my money in a private equity pool that I can't transparently understand its value. Or far worse, a credit pool, which is just bad loans tapped in a nice boat. So I will get back into the markets when they mean revert. I will get back into bonds when there's a discount that I can afford to take risk on. I will not chase these tops. And I will not say gold's the only thing that you should own. But my gosh, the fact that it's so grossly misunderstood. And I'll close with one other thing. The global allocation to gold is about 0.5% because of the opportunity cost in chasing tech stocks. Mm-hmm. But the 40-year mean for gold is 2%. And I believe in mean reversion. Mean reversion in the stock market means it's going to come down by 60%. And again, Grantham at GMO says the same thing. The Elliott's, Singer, same thing. It's not just me. That's the smartest guys in the equity room who see a mean reversion. But I think gold will revert to its mean of 2% allocation. That means a 4x increase in price today just on mean reversion.
See, he doesn't understand it at all. Okay, stocks are going to come down because of the inflation, and all the companies won't make profits because of the inflation, because the dollar's worthless. They got to charge more, but they won't make it because nobody can afford it. Secondly, all the dollars coming back now from the petrodollar going out and the $20 trillion of U.S. printing, all the printed dollars, as I showed you with the Nazis yesterday with England, that's why the stock market's, all these people are going to pull their stocks out. Did he say that? Does he understand that? He's talking mean stuff. He's talking analytics and algorithms, but does he understand the variables? Does he understand the variables has changed? No. Then he says, well, gold should go up for the same, go to 2%. No, BRICS is going to change the gold price. Getting out of COMEX, blowing it up, is going to change the gold price. So he doesn't know it's been paper gold since 1971. So he's looking at charts from 1971. This is what gold does. Da 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 da. That's all paper price fixed gold, and we're still at 2,300 in price fixed. So he doesn't get. So as soon as I hear this shit, he doesn't understand. I lose him. I go, this guy's an idiot. He's not worth listening to. And he is. He sounds like a salesman. He talks really fast. He doesn't explain what he's saying. Then he brings up other people. Well, Joe Blow knows this, and I'm following Joe and Fred and Steve. I don't follow anybody. So he just sounds like a salesman. He talks really fast, and he clearly does not understand anything about economics, anything about gold. He just knows gold's good, but he doesn't understand it's paper and physical. Why not? Why doesn't he understand that? The most simple thing.
Notwithstanding all the other fundamentals and all the other reasons gold is going to go up, whether it's the petrodollar, de-dollarization, central bank purchasing, I could go on and on. But just on mean reversion alone, gold is going to go up. So, but that's as a speculation price point. But get past the speculation, I just know it's going to hold its value a hell of a lot better than a Canadian, Australian dollar or a US dollar or a peso or a yuan
Why?
or yen or euro or even a Swiss franc. So I don't know why that isn't axiomatic, but to your question, the banking industrial complex doesn't want you to understand that. And that may sound dramatic. Believe me.
No, schools don't want you to understand. They don't want you to understand it because they want you in the Ponzi scheme, just like Madoff. He never answered the question I just brought up about gold. He's bringing up all these other dollars. They're all worthless. All the dollars have been printed to zero. He doesn't get that. All the fact that the gold will go up because of BRICS, because the BRICS currency is going to be backed by gold, which is going to raise the gold price. He doesn't get that. And as the dollars go to zero, because they're all worthless, there's no other where you can buy Mantle cards, you can buy Rolexes, or you can buy something limited, gold and silver. But he doesn't understand that. So he knows gold's going up, but he doesn't understand why. He doesn't understand the dollars are going out because of the inflation. I doubt he understands what inflation is. This is the problem I have with this boy. He's just too fucking stupid.
I come from banks. My daughter was at Goldman Sachs for 5 years. I traded at prime broker through B of A and Goldman and JP Morgan. I know the banking world. Egon von Greyer spent many years as a Swiss banker. We have a partner now who spent 20 plus years at Morgan Stanley and Solomon. It's not that we don't understand banks. We do. We don't hate them. They're not all evil. But I'm telling you, they're not fiduciaries right now. And the fact that we're not talking about gold is because they don't want you to know about gold. It's not profitable to them, and it's not good for business in DC.
It's not
and that's
part
the
of their
reason most people don't
products.
touch or talk about gold.
Well, when we're considering, let's say the bank's behavior or
See, it's not.
Treasuries, whether you're looking at gold. See, that's getting weaker by the minute.
Yeah, I think that's probably one of the best ways to put it is that gold should be your savings account, not thought of as the checking account.
Yeah.
And there's another piece to that I'd like to get to. But first, you mentioned this deliberate misunderstanding of gold. What do you mean by that? Who gains from it?
to get out of debt. That means we have to have inflation higher than the yield on the 10-year. I know this sounds wonky, but the Fed actually needs higher inflation. And what they do is they just misreport the inflation. There's all these tricks between open lies in the CPI scale and backdoor liquidity that are highly inflationary, which is, again, throughout history, debt-soaked nations, including the world reserve currency in the U.S., need to debase their currency to monetize their debt markets. And the Fed's real mandate isn't employment and inflation. The Fed's real mandate is to keep U.S. bonds bought by something or someone.
So again, that's Keynesian. We need inflation. We need to ruin our currency. But I read you that the most prosperous growth cycle ever in the history of life, from 1877 to 1914, we're on the gold standard. No inflation. What the fuck's he talking about? Governments don't need inflation. Inflation's terrible. Why do they think they need inflation? It's the productivity that grows. That's Adam Smith. You don't make inflation to grow your economy. So I don't know what he's talking. I don't know where he learned this shit from.
And if no one else wants them, they'll print the money or create the liquidity to support that market. And that is always at the expense of the currency, which is really at the expense of the middle class.
So
What do you mean middle class? Wouldn't it be everybody? So the inflation only affects the middle class. Well, what kind of comments that? What's he talking about? See, this is why I don't want you to listen to people like this, because they're fucking idiots. So be careful. This Matthew Pathenberg is fucking clueless. He's Keynesian. He doesn't know what he's talking about. You don't want inflation ever. You want gold. That way you can't inflate, and it's the best possible situation you can have. That's like saying, well, some of the Mahomes cars we want to print a lot of. No, you don't want to print any of them. You want them all 5 and 10 counts. All right, let's hear what else this idiot has.
We talk a lot about currencies, Matt, and it's always brought up that there is a real opposition or a new replacement to the global reserve currency with, this alternative currency system that the BRICS seem to be, again, slowly building progress on.
3 months away, fellas.
What do you see as, let's say, either the most likely candidate to replace the dollar, and or do you see this as, this gigantic looming instant signpost all of a sudden that ends the hegemony of the US dollar? Or are all of these currencies in a way in the same boat against hard assets?
Yeah, let's be real clear. Even when there was a couple of years ago when everyone was all galvanic about a BRICS new currency, gold-backed currency.
Looks how he looks away. He's lying.
I'm not right on everything. I've been wrong on a lot of things.
Do you see how he looks this way? He's lying right now.
But I knew that wasn't going to happen. It doesn't need to happen. It's certainly, and I'll explain why. But to your first question, no, the ruble and the yuan or the real or the rupee or the peso or the British pound sterling is not going to replace the U.S. dollar as world reserve currency. There is going to be no new currency. There could be central bank digital currencies and some IMF reset, but the dollar will still be the world reserve currency, in my opinion. What is definitely changed is not that the dollar will be replaced, it's being repriced. And that as a reserve asset, the U.S. 10-year Treasury or the U.S. sovereign bonds are openly and not gold-buggingly, sensationally, currently, and in the last many years, being replaced by physical gold. And again, you can show the charts. Since 2014, central banks, in particular in the East, have been net selling U.S. Treasury.
Okay, so first of all, the U.S. dollar is done as the reserve currency because of the petrodollar problem. Secondly, he doesn't understand it. It's not going to be replaced by another paper Madoff. It's going to be replaced by a gold-backed BRICS currency, which will be out September, October. So I don't know why he's thinking the U.S. Did the Romans not go under? Or did I miss something? Did the Nazis were ready to inflate the British pound? Did the British not kill the French franc in 1795 that I showed you yesterday? What's he talking about? So the U.S. dollar will just keep going with no problem, even though we have this huge debt and we printed 150 trillion of them, of which most of them are coming home, which is going to ruin the stock market, ruin the housing market, create the inflation and higher interest rates, and the fact that nobody wants it, and the fact that the BRICS will have the gold-backed currency. So no, the ruble's not going to replace it. Nobody's saying it will. What they're saying is this gold-backed currency is going to replace it. Any currency backed by gold will replace any currency not backed by gold. That's the bottom line. So what is he talking about? And then he goes, he's got to name 15 currencies. Like, dude, we get it. Shut the fuck up already. So he's very hard to listen to. He doesn't know anything. He's lying. He's looking down and to the right because he's lying. There will be a gold-backed currency, as we know. That's why we listen to Mark McGuire, and I point that out to you. And Mark's saying, yeah, there'll be the gold-backed currency comes out September, October. And it's definitely coming. That's why we're excited, because now gold price goes up, the dollar goes out. So we got to prepare for the dollar to be out. We've got gold and silver. It's very simple. You can't print anything. You overprint it, it's worthless. But this guy doesn't get it. Oh, the U.S. will still be the reserve currency. It ain't the reserve currency now. It's just that the other currencies are so bad. But until this gold-backed currency comes out, it'll flush out the dollar, will be worthless. Even if it doesn't come out, the dollar's worthless because you can't fucking print it. So the game's up. And, you know, here's a guy that is clueless, right? Doesn't know what the fuck he's saying, doesn't know about the gold-backed currency, which is surprising because Egon knows about it. Even though Egon's a banker, he knows about gold. He knows they inflate the money to zero, and then here's the gold. But this guy doesn't seem to understand it. It's sad that he's on a show. He doesn't understand what he's talking about. That's why I watch these idiots to point out this shit. In case you're watching him and he's, oh, yeah, this Matt guy's really good. No, he sucks. He's an idiot. I don't want you guys listening to idiots, but I'm trying to explain why. All right.
Which they don't want and don't trust, and net buying over 1,000 tons a year in physical gold. That, again, isn't a gold bug argument. Watch what the central banks are doing, not what they're saying. And if central banks are buying gold and dumping U.S. treasuries, that's because they're using gold as a savings instrument and the dollar or other fiat money as a liquidity instrument. And that's exactly what our clients do. And to make sense of that, again, you save in gold now, not just as individual families. If I have X amount of ounces and grams of gold as my savings account as opposed to fiat money, if I need liquidity to buy a house or to pay for my daughter's wedding, I can sell some gold and convert it into dollars to get liquidity to pay for the wedding. But I save and store my money in gold because it holds its purchasing power far better than a U.S. dollar.
Why is that?
U.S. Treasury by extension. And again,
why?
Just so this doesn't look like a gold bug case, keep it simple, stupid. Think about a simple example. I've said this to family offices. I've said this to high net worth investors who are smart in a lot of ways, whether it's in medicine or cattle or mining, but they don't understand. They don't understand money, and they think they do. So you have to keep it simple, stupid. Again, not meant to be condescending.
You are
You
stupid.
can argue, well, there's gold consolidates and goes down, but it's really trending up. But pick your statistical window, Matt. You're just going to tell me what I want to hear. But no, think simple, stupid. If in 1920, and I use this example over and over, if in 1920 you wanted to buy a house in America, the average home price in America was $5,000. And in 1920, an ounce of gold was $20 an ounce. So if you wanted to buy a house, you could either take $5,000 in dollar bills or $20 bills or $100 bills, put it in a shoebox, walk over to the realtor and buy the house. Mm-hmm. Or you could have had 250 1-ounce coins, little bars of gold, and at $20 an ounce, those 250 1-ounce bars would also buy you a $5,000 house. Now, if you fast forward to 2024, over a century later, the average American house is now $500,000. Now, if you took that same shoebox of cash from 1920, nice old $20 bills from 1920 or $100 bills, that wouldn't buy you a house today. But if you had that same shoebox of 250 1-ounce coins or ounce of bars,
that wouldn't buy you a house either.
Would buy you a house. And my point is, Gold significantly stores value better than fiat paper money.
Why?
What would you rather save your money in
Why?
since 1920? Those dollar bills?
See, he can't answer the question. You've got to explain why. You can't just say it. But he doesn't know, so he can't answer. It's because you can't print gold. You can't inflate it. But it's not even close to the price. So his conclusion's wrong because COMEX has been price fixing it, keeping the price down. So I can make the same conclusion with the Montana card. I paid maybe $100 for it. And if I bought it 10, and now it's worth 125,000 since 1990. In 30 years, it went from $100 to 125,000. So go fuck off, man. The Jordan card you could have bought for 30,000 when COVID hit is now 500,000. So his arguments don't really make sense. He's trying to, but he can't explain his paper gold, and gold's not at a free market price. And that's where we're headed. That's what we're going to get from BRICS is a physical free market price, and that's going to be huge. That'll make the Montana card look like be worth a nickel. But anyway, so this is the problem with this guy, and this is the problem with most of these guys. They want to make the point, but you got to explain the point, and that's what I try to do to you guys is explain the point. Right? Look, at the Nazis wanted to print money because if you print the money becomes worthless. So now you understand why the Nazis were doing. If they flooded the British pounds into the market would have collapsed because there's too many British pounds. And what the Germans did, or what the English did in 1795 to the French, they flooded the market with French francs, and it collapsed it. And then they burned them all in Paris, like they said. So what are you doing now? You're printing the dollars to nothing, and your gold can't be printed. So it's going to go up. Right now it's priced in dollars, so it can only go up. But once we get to a physical market, believe me, if the Montana's 125,000, gold will beat that by a good portion. So I don't want to waste too much more time with this idiot, but we want to watch Egon when we're watching this guy, not him. Now here's one on BRICS launching their payment system.
Your life is never going to be the same. So I need you to stop whatever.
Then we won't watch.
Tangled up with some of the toughest sanctions the U.S. Folks, we've got a major shakeup in the global financial scene that's going to make some heads spin back home. Russia and Iran, those crafty BRICS members, have pulled off a slick move. They've gone and linked their national payment systems. Now that's a game changer, and here's why. They're bypassing Uncle Sam's financial clout. The big bosses over at their central banks have been working overtime to mesh Iran's SAM system with Russia's own System for Transfer of Financial Messages, or SPFS for short. This isn't just a little technical tweak. It's a massive jab at the Western financial stronghold. By using their own currencies, the ruble and the rial, these two are cutting out the US dollar from their trades. Imagine that. No more bowing down to the dollar or the euro. They're doing business on their own terms, and it's all legal tender over there. Now let me tell you, this ain't just about thumbing their noses at the West. This move is strategic. With all those sanctions piled on Russia since they walked into Ukraine, and Iran still getting the cold shoulder over its nuclear antics, they're not just sitting around. They're building a whole new financial playground, one where the West's rules don't apply. The first transactions, already done, and they're not stopping there.
Okay, so, there's no de-dollarization? What do you call that? And de-dollarization means we're not using the dollar. We're going to use a different method to pay. So when Russia wants to buy something from Iran, or Iran wants to buy something from Russia, they use this new method. They don't need dollars. So what's been happening for the last 1971 is you needed the FX exchange of dollars. So if you're Russia and you wanted to buy Iran, you would have turned your money from Russia into US dollars and then take the US dollars to buy the Iran dollars. And now that's out of the equation. But we printed all that money, and now it all comes home, and that's going to be massive inflation. It's like the Germans dumping the British pound, the counterfeit British pounds on England. all that's going to be dumped on the U.S., all these FX dollars that are not needed. I don't need it. I'm going from Russia to China, and and they're already doing it. Russia and China, and Russia and India, and China and India. Now Iran's in the game, and Saudi Arabia's in the game. You can buy oil from Saudi Arabia in rubles and in Chinese dollars. And eventually, what'll be is you're going to need gold dollars to buy the oil because they don't want to give it away. Because we all know all the paper dollars are the same; they're all worthless. You can thank George Soros for this incredibly stupid system that is being used, where they're all just printing the dollars. Well, look what Hitler knew not to do that, but yet all these countries don't know to flood the market. Are you kidding me? It's so stupid. And I hate when people start saying, well, you can tie the gold price to the interest rate to the dollar. No, it doesn't work like that. The gold price is the gold price. I don't tie the Montana card to anything. It's the market. So it should be a free market. So I don't know when they say that. I just shake my head. What are you talking about? So anyway, that's de-dollarization, is cutting out the dollar, which shouldn't be in the middle of all this shit anyway. That's the problem, but they printed all these dollars, and that's going to be the inflation problem because they don't need it, so they're going to send the dollars back, and there goes your stock market, and there goes all the banks and the houses and everything else because they're going to pull their money out. So when they say, here, take your dollars, I don't want anything in dollars. I'm going to sell. So like now they got US dollars, they don't want it. So Russia got rid of them, and Iran and China, they're all getting rid of the dollars. And so it basically, they go to the bank gives them their currency. And then, so it's like when I'm in Europe and in Barcelona, and I go, okay, here's, give me 200 US dollars, and I use my debit card at an ATM. So I'm giving you US dollars for euros. And that's what they're doing. So then they give the US dollars back to America. Well, we got somebody with the US dollar. We don't want them. We gave them euros. And that's what happened. So that's what's happening with all these countries. They're saying, fuck it, we don't want to mess with the dollar. And everybody's getting out of the dollars. And now this gold-backed currency, because they all know what Hitler knew. Well, we're fucked if we just stay in the dollar because it'll all be worthless. The only way out is gold-backed currency, and that's why they're buying all the gold. They want to get out of the dollar, and then they want a gold-backed dollar because then it can't be printed and it can't be, it won't be worthless. That's all they're trying to do. So that's what this Iran thing's about. So we can listen to Mark McGuire and Alligator, but we can listen again. It's 11 minutes. I'll see what we listen to. But again, here's a guy, and all he's doing
This is the internet's best kept secret to buying new jewelry. How about this authentic Louis Vuitton charm?
It's a fascinating situation.
So Alligator was on Mark McGuire a couple of weeks ago. So this idiot, this Silver Ocean just steals it. And so now he's playing that interview, which we saw, but this is a part of it. So let's take a look.
Because silver is not priced as money at all. It's not valued as money.
It is money.
I mean, if it was valued as money, we'd be looking at a gold-silver ratio back in sort of, Sir Isaac Newton's levels.
It's paper, you idiot.
So it's definitely not. Yet, the thing that's fascinating is that when gold runs, silver runs twice as fast. So it does have this sort of moneyness, if you like, inside it, even though it is not priced as money. On top of that, of course, we've got, as we were talking, we've got the shortages and the squeeze in the paper market and the lack of liquidity, which is driving the price. I mean, I can see silver actually going more rapidly than twice as fast on the upward direction as gold. So, for people who can stomach a little bit of risk, and there's no sort of extra return without some sort of risk, then it actually could be a good way of getting to gold
go via silver. If you can take the risk, go via silver. I would expect to see silver outpace gold, certainly until you get the silver gold ratio down to somewhere between 30 and 50. I can't be more precise than that. At which point, I think I would probably reassess the position. I personally have quite a bit of silver for that reason. I want to get as much leverage on the gold thing without going to a bank and saying, look, here's my collateral.
Yes.
Okay, so here's the problem with what these guys are talking. I don't want to buy silver to buy gold. I can buy a little of it. Problem is, okay, gold hits 30,000, silver's 3,000. So I want to take 10 ounces of silver to buy an ounce of gold. You can be able to find it. See, that's the risk you're taking, which they don't even understand. Is the gold going to be available to take my 10 ounces of silver to buy it? I want all the gold I can get now. Silver, okay, if I can pick up some, I pick up some. Gold's going to go to the moon. And when he says silver will move twice as fast, it's because it's $30. So silver to go to 60 is 100%. Gold's got to go from 2,500 to 5,000 to get that. So it'll happen. But, the problem is a bird in the hand's better than two in the bush. So in other words, if I have the ounce of gold, I got it. I don't have to worry about it. And then let it go from 2,300 on up. But if I bought 10 ounces of silver or 20 ounces of silver in lieu of, I'll buy the gold later. Well, what if you can't find it? So that's really the problem, is trying to find it. But it's amazing how many people, I think it's our background in football and baseball cards, sports cards, and our background in gambling that really gives us a huge edge over these guys, because they don't know how to use variables. They don't understand variables. See, that's what I understand is, Brady's not on New England anymore. He's on Tampa. So I can't use the New England trends. And I can't use the Tampa trends because they're not with Brady. And that's what they don't realize. Well, silver will hit $50. No, that's the paper trend. We're talking physical. And they are having a hard time understanding the difference. And he's saying, well, there's a lot of risk in silver. No, not in physical silver, in paper silver, because they can do the derivative and there's no taking the taking delivery. You can take delivery of gold because of the new tier 3 thing, but you can't do it with silver. So it's not volatile, it's paper. And as long as you have these paper derivatives in a derivative market, of course it's volatile. Silver isn't volatile, it's the derivative that are volatile. They don't understand that. They don't understand how it works. These are bankers that have no clue about how a derivative market works versus a physical Patrick Mahomes, Joe Montana market, right? They don't get this market, and that's their problem. And without getting it, so they're just, it's more volatile. No, the paper derivative market you've been looking at the last 20 years is volatile. We're not talking about that. We're talking about the physical silver market, which is what's coming with BRICS. So anyway.
No longer got it. I don't want to go into that game. No, thank you. I really do think that silver has a role to play here. And in the very, very short term, there is no doubt that this ESG rubbish is creating enormous demand for silver. There is no supply there. And on those grounds alone, it's going to drive silver a lot higher. And it's going to break the market. So this is something actually I'd be very interested in your view, Andy.
Okay, so again, in the physical silver, it should be about $1,000 an ounce. But because they're price fixing it so they can buy it to use, like these Tomahawk missiles, they need 500 ounces. So they're keeping the price down so they can buy it for the missiles or these solar panels. Okay, but that's not the real price of it. So as the demand goes, you've got to get out of COMEX. COMEX is illegal. It should be gone, but the people running it won't let it go. So you've got to be smart with it. That's why I'm not too keen to buy as much silver now. When I go, I buy gold, but I am, I'll start buying some silver. But right now, the point is to buy the gold because you got it. We know gold's going because of the new Tier 1 and Basel III, where they have to deliver, and that's going away. And they ran to Bitcoin to fuck that up. But anyway.
I mean, what I see is after 40 odd years of paper markets and the actors in those markets being entirely used to a situation where delivery never really takes place. And it's just credit. The whole thing is done on credit. It's a mountain of credit, which can be expanded, contracted, whatever. We're now in a situation, I think, where that credit is now being encashed for physical. This is really what it boils down to. I mean, we see the deliveries on COMEX, which is never meant to be a delivery market. We see how this stuff is being drained out of the West into Asia. So we're looking at, I think, a potential crisis in the paper markets, which could actually take out the bullion banks.
It's a fascinating situation because silver is not priced as money at all.
My wife is intimate with her boss to keep her job. They think I am a broke trash, but in reality,
it's as money at all.
Nobody cares.
If it were valued as money, we'd be looking at a gold-silver ratio reminiscent of Sir Isaac Newton's times, where it was around 16.1.
First of all, silver is paper, not physical. We already know that, but it doesn't mean it's not money. It is money. So I don't know what he's talking about. What's cooking with silver? Oh, I was just showing the alligator. Silver's got a little ways to go, but the demand for the physical is trying to blow up. But until COMEX starts with the gold-backed currency, it's still $30, $31. You're just not going to see it take off because they're still price controlling it. So because they need to buy it for the Tomahawk missiles and for the solar panels. So because they need it to make this stuff and the electric batteries, they're keeping the price down. It's not being treated as money, but until we get and blow up COMEX, it's not going to run as we think it will be because they keep doing derivatives. But gold's different because Basel III and Tier 1 money is now gold, and they take delivery. And as Alligator said, well, it's not meant to be a delivery system, COMEX. So all these people want gold are now going to it. But that's what's happening. You should listen earlier on. I was trying to explain, they had this idiot on about like why Wall Street and the banks don't talk about gold. And the simple answer is because you're talking football versus baseball. The markets and banks are football. Gold's baseball with the cards, with the Rolexes. Those are baseball. That's football. So why doesn't the Wall Street banker talk about gold? Because it's not on the menu. The menu is stocks and bonds and real estate trusts and mutual funds, but there's no gold on the menu. That's why they don't talk about it, because they don't. It's like putting the Joe Montana rookie card. They won't put that on Wall Street either, because once you sell it one time, it's gone. They're looking for go buy 1,000 shares of Apple and then sell it for 1,000 shares of Amazon. And we make commission when you buy it, when you sell it, when you buy the new, when you sell it. We're going to make you rich buying these stocks. And you just see dollar signs, but I won't make you rich buying gold. Yes, you will, but you're too stupid to understand it as paper or physical, and therefore it's not on the menu. That's why they don't talk about it. So it's a whole different game. It's football. Well, it's like talking golf with you on tennis. Well, you don't sell golf clubs. You sell tennis. So why would I, so there's no correlation to it. And that's what this idiot doesn't understand. Well, why don't the banks talk about gold? Because they're selling paper products. And they don't talk about Joe Montana rookie cards either. And that was the point I was making. Gold price rising will pull silver along for the ride. Those derivatives need to break. Tick tock the clock. Well, that because of it's a tier one supplier and Basel III, gold will go. Silver won't start moving until it goes, and it doesn't matter. The price of silver is not tied to me and you could go buy 100 tons each, and it won't move the price because the price isn't looking at that. The price is looking at the derivative at the derivatives. Where gold is different because they're taking the dollar, they're taking the derivatives away because they're taking the physical out of it. And it's more, there's more demand driving up the gold price, but neither of them are anywhere close to reality. And that's what BRICS is going to do for us. That'll get gold backed currency, which will raise the price of gold. And that's really what we're looking for to get the prices we're talking about. And I showed this thing on Hitler yesterday. I think you should watch it. And basically, there was a plan in World War II for Hitler to get the concentration Jews and print and make counterfeit British pounds, and they did it. And so they made all these British pounds, and the plan was to dump them in England and bankrupt England because of the bankrupt the pounds. Because if you print all these dollars, it goes to zero. And as they were doing it, they realized it was more important to keep them and use it to buy things. So they were taking the phony pounds and buying all this equipment and food and everything else. But that was Hitler's idea, was we'll bankrupt London with counterfeiting and flood the market, which would bankrupt it. Funny how nobody understands that here. Everybody thinks, oh, you can just keep printing and printing and printing. And Germany and England did that to France in 1795. They said, they're fighting the England and France war. Again, maybe the War of 1812. I don't know, whatever was going on in 1795. And the British made all these fake French marks and they dumped them into Paris. And it flooded the market and it ruined their pound, the British pound or the French franc. And they had to burn all the French francs because it ruined their economy. So everywhere else, if you print a lot, it goes to zero, but somehow it doesn't do it here. But the savior is always gold and silver because you can't print that. You can't burn gold. You can't burn. So that's why it's the perfect thing. Anyway, so that's kind of what we're talking about. But yeah, don't worry. Once we blow up the dollar and we get to the BRICS, you'll be fine. The only thing I can say is don't sell your gold for this crap. I mean, wait for the new currency, or if we can buy BRICS gold back currency, I would say sell your gold for that. Don't sell it for this because this is worthless. That's probably the biggest point. All right, let's see what.
Instead, we're seeing much higher ratios, indicating that silver is significantly undervalued relative to gold. Despite this, when gold runs, silver tends to run twice as fast. This implies an inherent moneyness within silver, even though it is not currently priced as such. One of the intriguing aspects of silver is its dual role. On one hand, it's an industrial metal with extensive applications in electronics, photovoltaics, and medicine. On the other hand, it has the characteristics of money, which come to the forefront during economic uncertainty. The current squeeze in the paper market and the lack of liquidity are driving its price up. This could mean that silver might actually outpace gold by more than twice its rate, especially if the gold-silver ratio moves down to...
All right, these guys don't understand it. It's going up because the dollar's going out. The dollar has no value. It's been printed to death, and with the loss of the petrodollar, all these dollars are coming back to the U.S., which is flooding it, which is going to be major inflation. And the only way out is the gold and silver, the Rolex, or the Mickey Mantle card, or in your case, the Roberto Clemente card. And that's it. There's that's the reason. That's the real reason, right? It's you're printing the dollar to zero, and therefore gold and silver, our money, will go up because the demand of anything that goes up, the price goes up. So it's very simple what's happening. So again, you get these bad analogies and bad theories that they don't understand. So these guys just hear somebody else and they say this and that. Oh yeah, gold's going up because the central bankers are buying. No, because the dollar's worthless, you idiots. But they don't want to say the dollar's worthless. You can't fucking print them. If Hitler could figure that out to put out the British by printing and flooding the market, and it was going to make the British pound worthless, he understood it. These idiots don't understand. You can't just keep printing money to death and it's not going to lose its value. Come on.
Somewhere between 30 and 50. For those who can stomach a bit of risk, silver could be a good way to leverage the gold bull market. Personally, I hold quite a bit of silver for this very reason. It provides a way to get exposure to gold's price movements without having to rely on bank leverage or deal with the risks associated with it. Moreover, the ESG, environmental, social, and governance movement, is creating enormous demand for silver, especially in the production of photovoltaic cells. Countries like India are
Solar
ramping up their
panels.
ESG credentials, which is driving demand for silver even higher. This demand, coupled with limited supply, is setting the stage for a significant price increase.
China has been controlling the price of silver for a long time, really because it needs it as an industrial metal. But India has become a major buyer, really, again, for industrial purposes, because India is ramping up its ESG credentials. The government is encouraging and I think even subsidizing the production of photovoltaic cells. And so, I mean, Reliance Industries, one of the major conglomerates in India, has recently opened a factory which produces 5 gigawatts of photovoltaic cell output. Needs a lot of silver. And so where do they go? I mean, it looks to me like they've been standing for delivery on COMEX, where, I think over 1,500 tons has come out this year. We're talking about quite serious quantities, and stocks in the vaults, free stocks as opposed to stocks which are actually sort of held by ETFs or other serious holders, as it were, long-term holders. That liquidity is actually diminishing very substantially. So there's a huge squeeze, and of course nobody on the short side in the paper markets can close their positions.
My new book, Keyboard Rich: How Anyone Can Earn 6 Figures from Home with a Simple.
Oh yeah, we can all earn $1
Nobody
million.
on the short side in the paper markets can close their positions. It is actually, I think I can see the possibility of a crisis in the bullion banking community. I mean, not just on silver, but also gold, where they cannot close down their position. And if you look at the producers on COMEX, when we had the spike up to $1,900, was it September 2011 or 12?
Yeah, exactly.
The producers category was net short of about 200,000 contracts. This time, they're short of less than 50,000. So you can see that the burden is actually on the swaps, and if they can't escape from it, they can't turn around and tell the miners and so on, look, sell your production forward so you can guarantee your cash flows, which is the old story that they do, because the miners aren't having it anymore. They're not idiots. So
Yes, they are.
This is a squeeze. Yeah. Under normal circumstances, you would expect the purchasing power of paper currencies to drive the value of gold valued in those paper currencies. But we could be moving into a situation where this sort of imbalance between the Chinese demand and the supply in the rest of the world could actually force the pace, raising the value of gold, if you like. I mean, I don't like the word intrinsically, because there's no such thing as an intrinsic value, because you value something against something else. But on its own, gold, in terms of its purchasing power, could increase very substantially, measured in commodities, oil, goods and services, whatever, because of this factor. In other words, it's not just the paper currencies driving towards their own demise. There is also an end coming from the gold side as well, because of this accelerating demand from the Far East.
China has been controlling the price of silver due to its industrial needs, but India has now become a major buyer, driven by its ESG initiatives. The Indian government is encouraging and even subsidizing the production of photovoltaic cells, significantly increasing the demand for
solar panels.
Major conglomerates like Reliance Industries are opening factories producing large quantities of photovoltaic cells.
Yeah, okay, we heard this. All right. We heard alligator talk. We don't need to hear you repeat what he just said. It all comes down to BRICS because it's not a free market, supply-demand market like the baseball cards, like the Rolexes, right? They're not. Those are free markets. Montana at 125 is a free market. That's what the market says it's worth, but you're not getting that in gold and silver, and that's what we're waiting for. We can thank BRICS for that. We got to kill COMEX, but we know gold's going to end first. And again, there's no risk, there's no volatility in gold or silver if you get rid of the fucking derivatives knocking it down. They're the ones pushing it down. Otherwise, it would not go down. Why would gold go down in this time when all the dollars are going to go to zero? Because they're all worthless. The Russians, the Spanish, the Germans, the French, everybody knows this. So that's what I'm saying. So it's a bunch of bullshit. And we're at 30.67 for paper gold, for paper silver, and 23.63 for paper gold. So we're actually up $1 today. We were near 2,400 on Friday, as I thought. And then you can see, here's the U.S., right? Look at that 10 o'clock, 23.68, and it drops to 23.50. So it goes down $15 because of the U.S. derivatives, but only $15. So the drops are getting a little lower. And then it immediately sprung back up, took another derivative, and then finally it's ending right now at 23.63. The volatility is Eddie Murphy in the derivatives. It isn't a free market gold price. I don't know why it's so hard for these guys to understand it. I guess they're just stockbrokers and they don't understand the free market because they've dealt with Ponzi schemes their whole life selling stocks that are made off. So I don't know, but it's not free market. It's not, it's not this. This is free market. So why is this worth more than silver? Does that make any sense? This 50 count Mahomes card. It's not his rookie card, but it's probably worth $2,000 and the silver is worth $30. Does that make any sense to anybody? So that's my point. It's not a free market. And that's what we're hoping to get to, the physical free market, thanks to BRICS. And that's coming September, October, apparently. Let's figure October. And that's it. I mean, that's the whole point. Nobody wants these useless dollars. We all want a gold-backed currency because then we'll know it's good. I mean, once you get to a U.S. dollar, once you get to a dollar printed, it's worthless. And that's where we're at. And with the end of the Saudi dollar, what do you call it? Really, I can't think of this word. Unbelievable. The Saudi dollar, the petrodollar. Jesus Christ. But because of the end of the petrodollar, all these dollars are going to flood home. Where are they going to go? First of all, half of them are trading amongst themselves. Saudi's taking dollars from China and Russia and whoever else for their oil. They don't need it. So all that money is coming back to the U.S., which is going to flood it, which is going to make the U.S. dollar worthless, which it already is. And then it leads you to the new, okay, where do I go? And that leads you to Rolexes, mantle cards, or dollars, or gold and silver. And so everybody, we've already got our mantle cards, so we're all set there. Not really going to go buy a Picasso or a Rolex, so then it leads me to gold and silver. And especially at the price of like the point of silver is it's so cheap. But be careful of the 10-1. It should work. I mean, because it'll eventually go 30,000 gold, 3,000 silver. But just be careful. The only thing you got to look at is, will there be gold available to buy with the 10 ounces of silver? That's your only gamble. Am I going to have, okay, $3,000 silver, 30? I want to go and here's 10 ounces of silver. I want an ounce of gold. If there will be an ounce of gold to buy is the question. So will the store have 30 ounces selling for $30,000? I don't know, because they'll be pretty dried up. That's your big risk. So buy as much gold as you can, because then you don't have to worry about changing it. But I do understand it, but they don't understand all the variables. That's what Mark says and all these guys. Well, I'm going to wait and take 10 ounces of silver to buy an ounce of gold. But you don't understand the variables because gold's so expensive. Will there even be gold to buy to take the 10 ounces and buy it? This is what we don't know. That's where the risk is. Now, maybe it's fine, but it's certainly not going to be like today. I could go to the store now and there's guys got 10 ounces of gold I can buy because people keep returning it. But these people are all they're going to shoot themselves because they're going to go, fuck, I sold it to the guy for 2,300 and now it's worth 30,000. I fucked up. Enjoy my gold. Okay. Luke, U.S. will have to embrace a gold standard. Well, here's where we argue. I don't believe we have any. You believe we do. So my question to you is, what makes you believe it? Have you seen the gold? I haven't either. But if you had it, why aren't you paying your debt out? Right? In other words, you owe $35 trillion and you got this 8,000 tons of gold. So why don't you just make gold, $30,000 an ounce and take the gold out at $30,000 an ounce and pay off your debt? Why wouldn't you do that? And then we're out of debt. Because what do we hear? We hear that the debt's the whole budget, right? We're going to spend $1.5 trillion on our interest on our debt, more than military and the whole budget. So we're doing a budget, and half the budget goes to the debt. So why don't we pull out our gold and jack it to 30,000 an ounce and pay it off? That's what I would do if I actually had it. That's where we differ. Why pay when the Ponzi scheme is still intact? Well, the Ponzi scheme is not intact. That's what the point is. The Ponzi scheme, nobody wants the dollar. That's the end of the Ponzi scheme. Nobody wanted Madoff at the end, right? He couldn't get any money in to pay out the other people. And that's what's happening now. We can't get money in. Nobody wants our treasuries because of our debt. So the Ponzi scheme is over. And like I used the Titanic, it's sinking. The water's coming in. It's sinking. But people aren't realizing it's sinking and they're not getting to the lifeboat. But it's sinking. And you're asking me, well, when's it going to sink? And you want like a time. And I'm sitting there going, well, I don't know, but you can see the boat hit the iceberg and the water's coming in. So we better get the fuck off the boat onto a lifeboat. And it's the same thing with the dollar. It's printed to death. Like I said, the Nazis, that was their plan, was to print all these British pounds and dump them in England. And it would have killed the British pound, because it would have made it worthless. That was what the Nazis were doing in 1939 or 38, whatever, with the concentration camp people. And maybe in the 40s, because I don't think the concentration camps were open in 1930. But that's what they were doing, because they knew if they flooded the market, it would kill the currency, just like the Romans did. So that's my point. The inflation kills it. It's already dead. You're trying to say the Ponzi's still intact. It's not intact. It's gone. People are not realizing the boat's sinking, but we realize the boat's sinking. So once you understand that the boat's sinking, you got to get off the boat. You think the boat isn't sinking. I'm telling you, the boat sunk. And that's where we have our little difference. People keep returning gold. I wonder why. Because people don't understand it, right? They bought it, who knows, $1,500, $1,000 an ounce when they were younger. And now it's 2,300, and they say it's the all-time high in paper, not in physical. So they return it because they need money to eat or pay bills. They go, well, I got this gold, and it's at the all-time high. It's not going to go up anymore. They don't understand it's paper. They don't understand it's headed for 30, 40,000. It's going to be even more. So you want to keep as much gold as you can for the next couple of years. I keep explaining that to the girls. I'm going, I got all this gold. Just wait. It'll go up in value a ton. I don't want to sell it at 2,400. I want to sell it at 24,000. I really don't want to sell it at all. But when it is 24,000, maybe we can sell an ounce or two and go on a vacation. But I'm really not looking to sell it at 20. Why would I sell any of my gold at $2,400 an ounce? You got to be out of your mind. 23.63. So that's why they don't know. Very few people understand or understanding the concepts I'm teaching you here. You got to realize how lucky you are. Nobody else teaches this. Nobody know. You hear Andy Shackman and Mark McGuire and Elliot. They don't teach it. They don't know it. The dollar goes to zero, and real assets, hang on, your Rolexes and your Mantle cards and your Picassos will keep their value, but the value will change from dollars to gold. So as you said, my few ounces of gold will buy the house, as I tell you, Luke. So that's really what is the point, is that the dollar gold is going out. So the Ponzi scheme's over, but most people just don't realize. But that's why they're doing it. They need money, right? So it's like why would I sell my Mahomes card? Because I need $2,000 for my 50 count Mahomes. Here you go. Give me the money so I can eat or pay bills or maybe I have a medical thing or something. So I need an asset, and that's why. So that's why they're selling the gold. They think it's an all-time high. They don't think it's going to go any higher. Wait till October when it hits 3,500 or so. So that's why, Greg and John. They're still getting away with it, inflate the debt away. Well, you can't do that. Once the banks lose control, done, and the banks are losing control. These high interest rates are killing the banks because they got things at 0 or 1%, and now it's 5%. The banks are all fucked. The banks run the country, so that's why it's taking a while. Since the banks print the money, they don't want the money to go away, but they can't. Look at France. The Brits in 1795 came in and printed all this money and dumped it on France. So it's not even like France did anything. But all this petrodollar shit coming back, well, that's it. That's the last. That's the final nail. That's the straw that breaks the camel's back is the petrodollar and the BRICS gold back currency and our dollar being worthless. Take your pick, a black swan event. Why are people so ignorant? I don't know. Do you really want me to answer that? I mean, they don't know. They haven't been taught it. Like I said, I happen to have an Austrian economics class to learn all this, and I show you my notes and everything. I happen to go back for a master's. I happen to learn Austrian economics. It's not taught anymore. People it's not that they're ignorant, they just don't know. I wouldn't know how to put an engine together on a car. Doesn't mean I'm ignorant. I haven't been taught it. Could I learn it? Well, I don't know. Do I want to learn it? Probably not. But certain mechanics, that's what they learn. But they don't know anything about money. We're money mechanics, so we understand money. I could not do an engine or a transmission or anything about electricity here. I'm not an electrician, so I couldn't rewire something. I'd probably kill myself because I'd have to be smart enough to turn the electricity off to monkey around with it. But people are not necessarily ignorant. It's what you learn. And that's the point and the problem, right? So do you know how an airplane works? Probably not, but Are you ignorant? Yeah. How does it go in the air? Because there's no wings flapping. We're just the jets and whatever. So you don't really know how an airplane works, but it works. You're not stupid. You just haven't learned. All right. So Luke, I had to liquidate 16,000 of my miners for a new car. My Subaru Outback died. Basically had 182,000 on it. Get another for 32,008 new. Haven't had a car payment in ages. Now you got a car payment. Yeah, pretty soon you'll be buying a car with your gold. So you're not that far away. Yeah, I bought Toyota. I get 250,000 miles. I had an 03 Camry that I lasted till 2018, and it still was good. I just thought I better buy a new car now because I was hearing what was going on. The interest rates were zero. So I bought a new Camry for 24,000. I was paying 470 a month for 6 years, and I paid it off in 3 years. And I'm glad I did, because now the rates, and I knew the rates were going to go up, and I knew the inflation. It's just inevitable when you don't back the currency with anything. It's what you don't realize is it's worthless the day you come out with new currency not backed by anything. So the CBDCs will be worthless unless they're backed by gold. And if there's a new US dollar too, if this isn't backed by gold, this will be worthless. And really, the only way out for the U.S. to survive is to have that 8,000 tons of gold and come out with gold-backed currency. And if they don't do that, they're fucked. And they won't do it because they're too stupid to, Hitler understood, they don't. And then it's a matter of knowing that they can't print as much as they want. So J.P. Morgan can't go, I'm going to go print $1 billion, put in my pocket, and nobody will know. And that's the problem with the government. It's so corrupt. They just print the money and put it in their back pockets. That's why they don't want the gold standard, because then they can't steal. What fun would it be to not be able to steal? Even though the gold standard is the most successful time and the best thing to have. Let me read that. I love reading this one. So the 3 periods of economic growth from 1879 to 1914, worldwide growth was 4.9% on the gold standard. So the whole world was on the gold standard, and it grew 4.9%. The money supply could only go up 2.5%. Prices dropped due to greater productivity. I think you had Henry Ford. I don't know when he started the car, but you started having the railroad and the ship and all these productivity gains because you had the gold standard and the money was actually worth something. Yeah, the change in cash was less than the change in goods. That was the number one time, 4.9%. The whole world was on the gold standard. The best growth ever from 1879 to 1914. So what the fuck are they talking about? You need inflation. These are idiots. This is that mad guy I was just showing you. He doesn't understand that. You don't need inflation, and you shouldn't have it. It's bad. It devalues the dollar. Keep the fucking gold standard, and the productivity gains will grow because you'll never have inflation, which means you probably won't have a lot of unemployment because the companies will keep growing because the money will be solid. That's the point of it. Problem now is you got to guess about the money. And it's amazing when I go on these interviews how stupid these people are. Well, I'd go on the gold standard and they look at me like I'm nuts, and I look at them like, well, good luck to you. See you in the poorhouse. All right, Luke, why do you keep saying this? Physical, not easy to liquidate. Why isn't it easy to liquidate? Where are you having difficulty liquidating your physical? Because if I go to my store 4 miles away, I can take all my gold and he'll give me cash in about 30 seconds. And all the gold he has at his store are from people coming in and selling it. So I don't, what are you talking about? So all this is at the store because people came in. This is his silver. So he has 1/10 of an ounce and 1/4 of an ounce silver. But let's see where the gold is. So here's his gold. All right. So he's got tenth of an ounces, quarter ounce. I think those are ounces, Cougaran, ounce Maple Leafs, ounce Eagles. So why do you make that comment? This all came from people coming in and selling the gold to him, and then I come in and buy it. And he makes the difference between the spot and the premium. And we're all happy. People sold it are happy. He makes a little bit of money. He's happy, and I can find inventory, and I'm happy. And he's got 3 stores. So I welcome you to come to Novi, where I live, and I'll take you to this coin store, and you can sell them in about 30 seconds. He'll give you the spot price of it. I really just I don't understand why you say they're not liquid when they're the most liquid thing there is. Now, I'm not going to go to Target and try to sell them. I got to go to the gold store or eBay to sell them, but they're very liquid there. Yeah, I'm not going to Kroger's to sell it. It's like selling the Mahomes card or selling a Rolex. Where are you going to sell a Rolex? You're going to go to a jeweler's or you're going to go to eBay. Well, that's how you're going to sell your gold and silver. You're either going to go to a coin store or you're going to go to eBay. But I wouldn't certainly try to sell it, walking down the street. Hey, Joe, you want to buy gold? I mean, that's crazy. Not easy to liquidate for larger purchases. Yes, it is. Yes, it is. What are you talking about? My guy came in with $100,000 check, and he bought $100,000 worth of gold. All right, friend I used to work with, I taught him, and then he ran, and I took him there, 100,000 to do it. So why you got 10,000 is what, 4 ounces of gold now? Why is that hard to get rid of? It's not. I mean, I'm showing you. I don't know if one person brought that in, but I'm showing you. He's got it right here. Look at the last 2 rows. It's 4 ounces of gold. That's going to be $10,000, $2,500 an ounce. $10,000. I don't understand why you say this. Very liquid, very easy. I can walk in with 25 ounces and he'd probably give me a check for that. He'd take it in a heartbeat because he knows he can sell it. I went in with my gold jewelry. It was about $2,000. I had my wedding ring and a nice gold bracelet. And I said, I don't want the money. I got a half ounce and some other gold coins for it. I'd rather have the coin than the jewelry. Took him 5 seconds. Here you go. He knows me. I'll be happy to go with you into the store. He knows me. You'll bring in your 4 ounces and you'll walk out with $10,000. You might walk out with a check because it's harder for him to keep $500,000 on hand. So he's going to have checks, but I don't get the hard to liquidate. Where are you trying to sell it at, Luke, that you're having this problem? Certainly not a good gold store. Like I said, if you want to sell 25,000, come on, I'll take you in, and you give him 8 ounces for 20 grand, and he'll give you the money just like that. I mean, as long as it's Eagles, as long as it's real gold, Eagles, Maple Leaf, stuff like that, you can identify it. It's gone. He'll take it in 2 seconds. As you can see, what he's got, that's his inventory. Luke, gold will get there. Hey, Greg and John, you don't even know what gold is. Didn't say harder, easier to liquidate. You were making the comment that gold's not liquid or you can't get rid of it. And I was shocked by that because it's the most liquid thing you can have. It's much easier. Okay, so just for you, Luke, all the Barry Bonds. Let's say this car is 5,000. I can't walk into the gold store and sell it to them. I'd have to go to a card show or eBay to sell it, right? So this is harder to liquidate than gold. The gold would be no problem because he knows it's gold. But you got to go to the right place, go to a store that sells it. And I'm sure if you did SD Bullion or one of these or eBay, you could easily sell it on eBay. That'd be no problem. It doesn't need to be digitalized. Why does it need to be digitalized? how do you how do you get it to the buyer? Or are you saying there's no physical? I would not trust digital gold if it's not physical. I want to hold it. I don't want digital gold. You have some silver. Very good, Greg and John. Nice to hear. What happens when it goes to 20,000 an ounce? Same thing that happens now. If you want to sell it, you go to the store, he'll give you the 20,000 an ounce and sell it for 20,000 plus premium or whatever. He'll sell it for 21,000. He'll buy it. He'll just keep buying it. The question you need to ask, Luke, is what happens when there's no more dollars? That's the question you need to ask. You want to sell it, it's not worth $20,000. The dollar's collapsed. It's now buying you a car and a house because you can't get dollars for it because there are no dollars. That's your real question. You just don't know to ask it. So in other words, gold hits 20,000 and then the dollar goes out and collapses and there's no more dollars. What do you do with your gold? Now I go buy a house with the gold. Because what is the guy who owns the house who needs to sell it? What does he take? Well, he's going to take an asset. So you can give him the Montana card for 100 and a quarter, or the Mano card for 70,000, or you can give him gold. And that's what'll happen is you won't be able to use dollars to buy gold or silver anymore. That's the problem with the silver. Thinking, well, when gold hits 30,000 an ounce and silver's 3,000, well, what happens when there is no dollar value of gold and silver because the dollars collapse, which is where we're heading. So in other words, you're asking, well, I'm on the Titanic, and then so what do how much do I got to pay to get on the lifeboat? And I'm going, it's already sunk. You're on the bottom of the ocean. You didn't get off. And that's what I'm saying here. So you got to realize, so when it hits 15, 20,000, nothing, he'll give you a check. Here's a check for the ounce of gold. And I would think it'd be highly demanded at that point because that means people have frenzied on it like they frenzy when the Titanic's sinking and they realize they need to get on the lifeboat and everybody's fighting it. That's what you're going to have in gold and silver. So it'll be a piece of cake to sell. But the real question is when the boat sinks, now what do we do? We're in the lifeboat, but the boat sank. Well, we got gold, but there's no dollar. What is it? And that's where we go to BRICS, and we all go to Russia and we get BRICS dollars for our gold, and or we use it as the asset. All right, I got, I don't know how the grocery stores will work. Should take silver. In other words, the dollar's worthless, but if you want, that 1/10 of an ounce silver to buy milk and eggs, and that's why you'll use the 1/10 of an ounce silver, because the grocery store will have to change his prices to gold and silver. He can't leave his prices in dollars because there is no more dollars. And that's where I think and hope that our credit cards go to zero, as does our mortgage payment and your car payment all go to zero because there's no dollars to pay them off with. Oh, you want $500 a month for the car? Well, wait a minute. There is no more dollars. How do I pay you? And it's certainly not going to be in gold and silver. It'll just go to zero. And all the banks will say, bye-bye. Interesting point. Thank you. I'm good with that, as you know. But that's what'll happen. So are you gonna, now we go to the coin store, what's he selling it for? He won't take your dollars. Now what do? You want gold. Okay, here, I'll give you 10 ounces of silver for your gold. He will take it but how is he going to price it? So that's really that's where I see the problem is changing the prices to $3 for Coca-Cola to what? How much silver for the Coca-Cola? It'd be far less than 1/10 of an ounce. It'd be 100th of an ounce. I mean, basically. And then they got to fill their cash registers with silver. 1/10 of an ounce, 1/4 ounce, 1/2 ounce, and an ounce. That's what they'll have to do, but they'll have to change all the prices. So your New York strip's going to be a 1/4 ounce of silver is going to buy you the New York strip, because the dollar is so polluted and worthless, and the silver's got so much value because it's so limited. And that's where the whole limited thing, and that's why I keep showing you this, because there's only 50 of this. That's limited. That's why I laugh at Bitcoin. Oh, there's 21 million, as opposed to, yeah, I got a 50 count card and you got 21 million. Who wins? So that's what happens. And that's why that Hannes Wagner card is so valuable. There's only 6 or 7 of them. It's like a PSA 1, but it's worth, $5-10 million. Luke, how soon I think all that will transpire? Well, it's been a long road, but the variables have changed, right? BRICS has entered the game, and they're going to a gold-backed system, so that's changed the game. The dollar is going out. The petrodollar is gone. All the money's coming back. Nobody will buy the U.S. debt. China doesn't want it. In fact, they're selling it. Japan doesn't want it. I showed you this. I'll show it to you again because you weren't here to see it. Put it this way, Luke, when you start seeing this, as soon as you see this in US dollars, it's all over. This is the new Japanese yen, a 10,000, a 5,000, and a 1,000 note. Japan's gone, right? Zimbabwe came out with like a $1 billion bill, which was worth a quarter, right? So as soon as you see this in the U.S., we come out with a $10,000 bill and a 5,000. You've answered the question, got answered. That's when it's worthless. $10,000 yen because they printed their money to fucking nothing. But that's what's going to happen to every currency. They're printing. You're dealing with idiots from George Soros and all these countries, and they're printing. And the MMT guys, you can just keep printing and printing and printing. And what does Hitler say? Oh, our plan was to print all these British pounds and dump them in England and ruin their currency. So wait a minute. So Hitler got it right, and everybody else is out of their fucking minds going to keep printing it. France is in trouble. Britain's in trouble. Germany's in trouble. Italy. All of the euro are in trouble. The euro is gone. I mean, this maybe buys me a gumball, right? It's not worth it's worth $5, but $5, the purchasing power of this is, a stick of gum, maybe. I mean, it's worthless, but that's where all of them are going. That's why the demand for gold is going to go to the roof, because once you realize it, and all these Wall Street guys realize it, the only out is gold and silver. It's the only thing that's real, because you can't inflate it because it's so limited. That's the key with gold and silver. It's limited. There's not a lot out. And believe me, I don't think there's really any gold out there. I think the central banks in Russia and China have dug it all out of the ground, and you've got the 250,000 tons. It's gone already, I would imagine. The only reason I can get it at my coin store is people bringing it in. So if I were to bring in 10 ounces, well, that's not new 10 ounces. I'm just bringing in, I needed cash, and then you come in and buy the 10 ounces. That's the only way it's working. But to find new gold, you can't. It's pretty much gone. And that's why COMEX will blow up. But that's what we understand. Most people don't have a fucking clue about, like I say, my biggest example is you got 500 grand in your bank and you think, I'm going to retire. And I'm like, it's monopoly money. It ain't backed by anything. It's worthless. And that's basically what it is. It's just worthless. So that's why we want to go to a BRICS country that has BRICS gold-backed currency. So the gold just circulates, right? It's in the U.S. and that now, nothing in the U.S., nothing in Canada, nothing in England. What is wrong with these people? Are they out of their fucking minds? How do you not know the basic thing?
New projects means new project managers. You need to hire. Indeed, you do. When you
Shut the fuck up. What was that? Anyway. So keep that in mind. All the currencies are worthless, but BRICS has all the gold. So all the gold went from the U.S. How did the U.S., Canada, and England get so stupid? They're all MMT. They all think that works, but Hitler was wrong, and the English was wrong, and the Romans were wrong. Everybody's wrong, but these idiots think you can just keep printing. It's just unbelievable. All right, so we'll take advantage of it, but you fucked our country up because without currency, you don't have a country. Really, you need that medium of exchange. You need to go to work and spend. That's how the economy works. But I can't go to work if I'm not going to get paid. So how are you going to get paid, Luke? I mean, what are they going to pay you when the dollar's gone? They're going to give you gold and silver, or what? Are we going to get a new currency and they'll pay you in that? But you don't want even money. Right? If you make 100 grand with this currency, you probably only need 80 in the new currency because it should be worth more. And if you're getting gold, you don't need 100,000 in gold to make the 100,000 in this crap. This is just totally worthless. So understand that this is worthless, please. That's the key. This has no value. You can't print it as they printed it, and it's worth. Nobody wants it, right? We have our debt. Nobody wants it. China doesn't want it. Japan doesn't want it. Germany doesn't want it. In fact, they're giving it back to us because they want gold instead. We don't want chocolate. We want vanilla. Okay, fine. That's what's happening. So just understand that concept, and then you're way ahead of the game. Then you realize, what do I buy? And that's why I'm saying, yeah, you can buy the Mantle card or the Joe Montana rookie. That'll keep its value. In dollars it goes away, but in gold it goes up. And but you'd be buy a Rolex. But those are fun, and they're just secondary things. That's how we're diversifying our portfolio. But we want as much gold and silver as we can get, because that's limited and it's going to hold its value. In fact, it's not going to hold its value. It's going to go up 5-10 times easily, and then it's going to be the money. And so then it's really going to go up, because now you go to a Mercedes dealer and you give him an ounce of gold and he's going to give you the car. But if you had this, you couldn't buy the car. How much is the car? Well, it's in gold now. So you got to go take this and buy gold. Good luck there. Everybody's scrambling at gold, 2,500. It's 2,500 on eBay now and 2,500 at the guy's shop. So you're gonna, how quickly are you gonna run and buy gold now? That's why I buy the quarter ounces, because they're still affordable at $650, and the tenth of an ounce. And I've noticed on eBay all the gold prices are much higher. I'm seeing 6,500 for a lot, 1,500 for the half ounces, the quarter ounces 750, the tenth about 300. And even the other, I mean, it doesn't matter. It's a little bit more for the U.S. than the Cougaran and the Maple Leaf, but doesn't matter. At the end of the day, they'll all be whatever they're worth. It won't matter. It'll be gold, and you'll take it. I did see an auction where the guy was definitely scamming. He's trying to sell from China. It was a silver eagle. And everybody's selling it for $38, $39. You're selling it for $25. Let me see if I can find this auction.
you sponsor a job.
Shut the fuck up. So you can see the prices 38, 39, 43. But there was one, see if I can find it. It was a couple days ago. So here's the Indian, $38. We can still go and buy them for 30 at the store. Also, I think soon, Luke. October is when the BRICS gold backed currency is coming out. When the derivatives break, so do the banks. Oh yeah, it'll be bad because they have all these derivatives of like I said on the Big Short. So Selena Gomez is playing blackjack, and people are betting if she's gonna. They're not even playing blackjack. They're betting will she bust or not. And then other people were betting on them, and that's what you had, this nightmare. And it's going to be bad. That's why the dollar will go out with all these derivatives. That's why you must own gold and use that as your currency. So the silver will protect you for the grocery store and the restaurants. The gold will buy you houses and cars. But then you can always use a half ounce of gold to buy 1 billion ounces of silver. So that's the thing. So the silver you need, you just think, what if there was no dollar? What would you do? What's going to be the medium of exchange? Gold and silver. As it was in 1879. What was it? From 1879 to 1914. There was no dollars. It was gold and silver. That was it. They didn't have any problem. They came out, what you did was you take it to a bank, you gave them a couple ounces of gold, and then they would give you gold-backed currency so you could walk with paper instead of all the gold coins. But you'd go eat, and you'd give them gold-backed currency. So we're going back to 1879 in our DeLorean. So that's where we're headed, is 1879, gold and silver-backed currency. So it's been done. The Romans did it. They had gold and silver. And I doubt they had dollars. I guess they just had that. Although it would have been a weird, grocery store in the Roman Empire. Let's see. So where is this scammer? He was a guy from China, but you see the prices. So you see everything's 38, 39, 39. Okay, that's the price of a 1 ounce silver bullion. And all of a sudden, let's say you see 25. You better be going, what the fuck is this? It doesn't, something smells wrong. 39, 40. Let's see if I can find this. Anyway, it ended up being like a $25 guy from China. And it just didn't, it's like, you don't even really look, you just go, fuck it, this guy's full of shit. But here's where you come if you ever can't sell it, Luke. You just come here and, all this gold and silver. I like that Liberty Dime silver. I think I have a couple of those 1 ouncers. And you can see the different variations. There's a roll of 20 for $6.60. So, I mean, if you always can come to eBay and sell it, the question's going to be, what are we using for money? That's what nobody seems to understand. All these idiots, they don't get it. They don't know how to think. The dollar is the medium of exchange. Well, there's a Coca-Cola one. I've never seen that one before. Huh. Well, I don't say I'm not going to waste their time, but anyway, if you see an auction where it says $25 and everything else is 40, just run to the exit. Don't think, oh, it's why is it, ask yourself, why is it cheap? The only answer you could have is, obviously, if you're trying to sell it and it's real, you'd be selling it for $40. Why would you sell it for 25 if you can get 40 for it? Only an idiot would do that. So you just assume it's counterfeit and don't fuck around with it. Because then you don't want to be Madoff. Oh, well, I thought it was cheap for 25 and I bought it for 25 and now it's counterfeit and the guy stole my money. No, you're a moron. Because if the prices are 38, 39, 40, and you see it for 25 and you bought it, you deserve what you get. You're obviously an idiot. Why don't you just buy one for 38, 39, 40 that you know is real? So then they're coming out with these. I showed you a tenth of an ounce, and here's a quarter ounce. So it's $13 for a quarter ounce. That could be good for steaks and hamburgers. Anyway, so that's if I see it again, I'll put it in my watch. The USD is still worth something, is it? Really? 1871. What's 1871? No, in my notes, it's 1879 to 1914. How will the currency crisis start globally? Well, Japan's starting it, right? Zimbabwe started it. Venezuela started it. Sri Lanka, Turkey's in trouble. And now Japan's in trouble. And then it'll be India's in trouble. India dollar's worthless. The US dollar is not worth much. It's worth compared to other dollars. But really, you can see, you can't really look at gold because it's price fixed. So I don't get if gold was 10,000 an ounce, what would be different for the dollar? I don't really understand that. The dollar would still be shit and worthless. Who trusts the government? So I don't get when these guys say, well, if the dollar went up in price, it would be bad. If gold went up in price, it'd be bad for the dollar. You're like, what? That doesn't even make sense. What would happen? So if gold hit 5,000 an ounce now, you're going to dump your dollars? If you know what's going on, we've already dumped our dollars for gold at 2,000 an ounce. At 1,700, I dumped. So I don't really get that. The currency crisis is already starting. I think it'll probably really get in high gear with BRICS gold-backed currency. I think when that happens, that's it. Katie barred the door. It's all over. My opinion. It's never been the whole world before. That's the real problem. Like we could bail out in 2008. I don't know. Somebody bailed us out. I think China did. But the players with the gold are China and Russia and India and Saudi Arabia and South America. They're the gold players. They're not going to bail us out. Now, keep in mind, BRICS is really not. BRICS is really supposed to be competitive, and so all they're doing is China and Saudi Arabia, or China's buying oil from Saudi Arabia instead of going through the U.S. That's really all that's happening. But it's the gold-backed currency that'll end it, because who would want to hold a euro, or British pound, a Swiss franc, or a dollar when you can have a gold-backed currency? And most people know the problem is there's not enough gold. So you're going to have what your brother's doing with his tickets. They're going to be all these demand for Super Bowl tickets without the ticket. So the price goes up because the demand is there. And that's what's going to happen. As the dollar goes out and the euro goes out, the only choice is then to go into gold. So the demand will be there, which will make the price go up. So that's kind of when it happens. It's really when there's no demand for it, Luke. Once the demand goes, then it's worthless. So the currency it'll start Japan, and then some of these, like Turkey, and then India, and then we'll solve that with gold-backed currency. But once it starts, Japan will be the first. Well, Japan's not even the first. Zimbabwe, Venezuela. It's going. It's already happening. You just don't see it. But the U.S. dollar not being the petrodollar anymore, there's your start. You just don't realize it. It's a big boat. It can't turn quickly, but that's your start of it. Your starts, it's not the petrodollar, and then the gold-backed BRICS currency, and that's it. It'll be it. And we're fine. We're not in the banks. We're not in Wall Street. We're in gold and silver. We're fine. Because nobody can fuck with us. Nobody can say your gold and silver is worthless. Nobody can take it from you because you ain't letting anybody in your house. So basically, you're protected. It's going to be much, much higher. And that's what's happening. So near the end, I think you'll start seeing prices go up. You'll see people panicking. Oh my God, what am I going to do? How am I going to eat? That's the hyperinflation, right? So we'll see, keep our eye on the prices at the grocery store. And again, it's not the prices. That has nothing to do with it. It's the fact that you printed the dollars and the dollars are worthless, so they got to charge more. So all of a sudden, Lucky Charms are $10 a box. Lucky Charms didn't raise their price. The dollar got killed, and it takes more dollars to buy your box of Lucky Charms. But everybody thinks it's prices. It's not. The dollar's lost its value, and therefore it's not worth anything. So that's really what you got to understand. It's the dollar printed. The printing kills the value. So when you're saying the dollar's value, the US dollar is still worth something. It might be worth something, but it's not worth what it should be. So like I say, my favorite is the car was 4,000 is now 35,000. It's the same. Well, it's not the same car, obviously, but that's how much you had to pay for it. In 71 was 4,000. Now it's 35,000, let's say, or whatever you paid 38. But it was 4,000 in 71. And that's the point. It's the price of the car go up. No, the dollars have lost so much value. That's how many dollars it takes you to buy a very similar car. But the basic is gold because it's an ounce. So that hasn't changed, and it went from $37 to $23.50. It's the same ounce of gold. What changed? Well, it's the dollar collapsing. The dollar lost its value, and now, so I really don't think this is why we don't want to hold dollars. Do you really trust the value? And if I go to Europe, meet the gals, I can use my debit card and buy whatever euros or whatever dollars they have there. From that standpoint, I can still use the dollars, but it's not going to buy as much. So I know when I was in the Deutsche Bank in Berlin, they charged me like $30, $40 to convert it, right? It was like I got $200. So I got 200 euros, and the Deutsche Bank charged me, like $260. The two, should be 200 and whatever the FX is. But what I'm curious is why is the British dollar worth more than ours, right? It's like 79 cents. Well, wait, we know that's collapsed. The euro's 93. Why? We know the euro is not worth as much as the dollar. So it's just interesting how they're all like that, but they're all going to start collapsing. And it'll just, like the store owner doesn't know what to do. I'm sure you raised the price of the tennis rackets, right? And you did it because the money's not worth anything. Eventually, you'll take gold. See, once you start taking gold for the tennis racket, not dollars, then you'll have your own answer that it started. But it started. Japanese started, Zimbabwe, Venezuela, Sri Lanka, Greece, Pakistan, Turkey now. It started. It's hitting these smaller countries, but that's what it is. It hasn't hit the U.S. yet, but with the petrodollar coming back, it's about to hit us very soon. So don't be surprised if, by September, October, we're out. So all you can do is buy as much gold and silver as you can. And since you have 2 boxes of silver, I wouldn't waste time with silver anymore. I would buy more gold. Even if it's quarter ounces, I'd be buying that and, getting your gold prices up. Or your gold inventory up, and have your brother stop selling the tickets and buying gold. I hope he's got a lot. It sounds like he probably does if you have it. But that's the bottom line is you got to be smart, as Greg and John likes to say. You have 6 boxes of silver. Yeah, yeah. So you'll be busy trading them in for gold. But yeah, see, I think a lot of people have a lot of silver. Sounds like the guy on Mark McGuire's show and Alligator and all these guys have a lot of silver because it's cheap. So you pull out 10 grand and you get a lot of silver, which I understand. And you're all frustrated, rising and going up. Well, it's price fixed, right? Why is it price fixed? Because that's what COMEX does. They fuck everybody up. And they make their money on derivatives. So Eddie Murphy sells it at $140 for orange juice and he buys it at 29. So whenever the price gets to like 31, 32, all the sell derivatives come out and then they get pushed down to, let's say, 30, and then they buy the derivative. So that's what silver's problem is. In gold, they take delivery. So it really fucks them over because once they take the delivery, you can't do anything. And that's what they're doing in the silver market is taking. In the gold market, they take delivery. In silver, they don't. So they just keep playing that game where we'll buy when it's down, we'll buy it. The price goes up, we'll sell we'll sell a derivative and let the price go down. So you're fucked in that. But because India and China want to buy silver, see, the problem is they want to keep the price down. So they want to play the derivatives, but they need the physical. And where do they go for it? And COMEX really isn't like a bank where you can go buy the silver. So I think they have to actually go to the mines or some storage location and buy it, which should force the price up. Why would I give it away at $32 an ounce when I could sell it for 50 an ounce? So that's really the question. These silver dealers are idiots. They don't know what they have. It's U.S. currency constant. Yeah, well, it is U.S. currency. It'll be global currency. I'm hoping that if I give some to Daria in Russia, she can cash it in. It should be gold is gold, right? So gold, wherever you're at, Switzerland, Germany, they're all buying it there. They should take it. Question you'll have to realize is taxes. What are they going to charge me to sell my gold? But if I'm a U.S. citizen, do I have to pay the tax? This I don't know. This we'll have to research when the shit starts hitting the fan. But I don't look because I'm not interested in selling at these low prices. That's the funny part is I know these 2350s are low. They're not the real price. They're the paper price. So if you keep that in mind, as I keep trying to tell you, Luke, these are paper prices. We want to get to the physical price and a free market, and then it can get to the 125,000 the Montana's at. So if Montana's getting 125,000, certainly you don't think gold won't, right? So gold should get there. Anyway, keep that in mind. And that's basically what's happening. So you just realize that you can't print the dollars and print them and print them and print them and have nothing happen to them. It's like eating a chocolate cake every day and you think I'm not going to gain weight. Yeah. Oh, okay. Yeah, sure. Nothing will happen. So it's the same thing here. It'll definitely go out. It's gone out every time in, Russia or Rome and England and France and Spain. It always goes out because they print it because because there's the corruption. There's always corruption around. Everybody wants something for nothing. They want the money. So they print it and they print it and print it and print it. And then eventually it's worthless. Always happens. Okay, Luke, have a nice night. Enjoy. How was your 4th of July? Did you enjoy it? I went up north and did some shopping and It was okay. I liked the day away. Yeah, the girls are fine, and the pool's fine. The pool is great. I had a pain in my side, and you just go in the pool and you kind of walk it off, and it refreshes. Then you take a nice hot tub, and it's great. So yeah, I always enjoy the pool, um, and the girls are fine. I'll finally meet Daria soon. Her mom's in town in Russia visiting other relatives. So when she finally makes it to take care of her daughter, then we can go to Serbia. So I don't know when. She can't give me like, oh, it'll be in a month or it'll be in 2 months or whatever. I don't know. I've never seen such bad information from Daria. I mean, can't she sit and talk to her mom saying, well, when's it coming? Oh, August 1st. Oh, okay, or whatever. Yeah, I look forward to Capitol Grill. We got to figure out what happened to Bobby. Uh, he hasn't been on since the day you and him were on a couple like in May or something. So I don't know, but we'll see. Bobby is missing in action. I know he was a little sick or thought he was, so I hope it's nothing serious. But it's not like Bobby to miss. He liked the economics. He was learning a lot. But anyway, yeah, Luke, you take care, and glad everything's okay. And just be patient. It's the end is near. It's coming, and we'll see gold go because they just are running out of inventory, and they can't do the derivatives without physical gold. So keep that in mind. And then they're just running out. And even the derivatives now are only going down like $10. They used to go $30, $40. Now, as soon as they go down 10, there's buyers and picking it off. And then they gotta deliver how much gold is left for these guys. So I think Canada was helping them a little bit. Although Canada doesn't have gold. Canada was doing some derivatives to keep the price. Like they're so worried about, I don't get why they're so worried about the price of gold. Oh my God, the dollar's going out. Fellas, the dollar is worthless now. It doesn't need gold to go up to be worthless. Anybody that trusts the government has to be out of their mind. What do you trust about them? We should meet up, come to Pittsburgh. We'll go see Paul Seekins and have a steak. Sounds great. Let me know what time. Yeah, I'd like to get out of here. And then again, I'll be going to Serbia soon. I don't know when. And then I'll be going probably to Spain in September to meet Jenna again. She found an island or something we can vacation. We wanted to go to Greece, but it's a 2-day flight to Greece because I think you got to fly into Athens and then wait a day in Athens to get to these islands. It was like 2 days. I'm like, fuck that. I'm not 2 days in an airport. I don't. It's hard enough. You leave Thursday night, you get to Europe Friday morning, and then you're there. Friday by 10 o'clock, you're at your city. So you've basically lost Thursday at the airports here. And then you've kind of lost Friday morning flying because of the time change. But 2 days, I don't think so. That's a bit much. But yeah, Luke, we'll definitely like to do that. So you have to give me your email or something. We can keep in touch again on teaserking.com, where my football site is. In my homepage is my email, so you can get it there. That's about it. So understand what's going on in economics. I also found out about the war. Such bullshit. The real reason for the war is all the oil and minerals in, guess what cities they're in? Yes, the island. What is it? I want to say Carpathian. I know that's not right. Donetsk region, the Kharkov region, and Odessa. That's where all the oil and minerals are in the Russian cities. It has nothing to do with the Russian cities. So the war is about getting the oil and minerals out of the Ukraine. And Putin says, no, they're mine. And we're saying, fuck you, we want them. And that's what's happening. That's what this war is all about, is trying to get after the oil and minerals. And it's all about money, as every war always is. Probably the same in the Middle East. It's probably about oil and minerals. But that's because otherwise, who cares about Ukraine, right? It's a nothing city, but it's got the oil and the minerals. So keep that in mind. So that's what the war is about. Everything's always about money. The U.S. right now, I'd say the biggest problem, they don't want a higher gold price because they don't have any gold. If the U.S. had gold, we would want a higher gold price. But since we don't have it, and Russia and China and India and Saudi Arabia and all those countries have a ton of gold, why would we want the gold price to go up? It would kill us because they'd be all rich and we won't have any gold. We're worthless. So keep that in mind too. We don't have any gold. I like to believe you, Luke, and think we do, but we don't. I mean, it's just not. There ain't nobody home. It's not our gold. It might be China's gold in Fort Knox. It ain't ours. So it's been bought and paid for. So keep that in mind. So anyway, quickly the baseball games. I know we've missed some. So I already gave this out just to recap. Baltimore, 2 units. Cleveland, 3 units. Philly, 3. The Yankees over 7-3. Cincinnati, 3. Minnesota over 7.5. 3. Milwaukee, 3. Houston, 5. Texas, 5. Atlanta under 7.5. Chris Sale, who was supposed to pitch yesterday, is pitching today. And then the 49ers over 7.5, 5 units. That's your baseball tonight, which we've already discussed. It's just a review at the end. And that's it. We did some football yesterday, week 1, and before that, college week 1, the day before, just to get a little bit adjusted to football, which is the big one. That's what everybody likes. And that's it. So that's what we got. Any questions, comments, please feel free. www.teaserking.com. You get my email there. You've got the YouTube page here. So I will see you tomorrow. Have a nice night. And just buy your gold and silver and everything will be fine. That's all you need to do. But the longer you hold on to the dollar, the worse this gets and the harder it's going to be to buy gold and silver. And that's the problem. All right, everybody. www.teaserking.com. Have a great night. Thank you.